An upstart union. That happened only weeks after the union won a resounding victory at a warehouse across the street. The election at a sorting center in Staten Island wasn't close. The Amazon labor union lost 618 to 318. Global news 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells. No one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It is simply unfeasible for economics or economies, for human beings and their livelihood and well-being, to shut down the fossil fuel industry. It would be a catastrophe today. So the goal here from all of us is, how do we accelerate the transition in a responsible manner that doesn't cause a major economic crisis?
Jane Fraser there, the Citigroup CEO from New York City this morning. Good morning to you all. Futures negative 0.5%, rolling over just a little bit. Keep an eye on this on the Nasdaq 100, down 0.5% also. Yields coming in about a basis point after briefly breaking through 3% on a 10-year for the first time since 2018. Right now, your 10-year yield, Tom, 296.53.
296.53. We're going to watch it, John. I thought Conrad Duquados was really interesting there about the push through. And you wonder, I mean, after the jobs report, maybe which is second fiddle to the Fed meeting on Wednesday, where's the 10-year yield going to be Monday?
The great fear that people have is later this year, this Federal Reserve has a dilemma, a decision to make between supporting growth or curtailing inflation. The hope is they don't have to make that call, Tom, because inflation comes down on a nice glide path and the economy remains resilient. And as you know, they're beautiful bedtime stories for equity market bulls, as I often say.
John,
it's going to be difficult.
We're going to get to this in a moment, but we need to reappraise here our soccer talk versus to the massive outpouring of Mets-Yankees verbiage we've seen over the last 4 minutes.
People want more Bramo baseball
talk.
They want more
Bramo Mets.
They want more Bramo.
We have a listener in Cambridge, a guy named Larry, and he says more Lisa Mets talk.
It's what we all want.
It's an audience of one. That's all I can say. I don't think a lot of people want to hear that.
I'll give you Mets talk. The Red Sox are going against Thor tonight out with the Los Angeles Angels, which is...
I met him a long time ago, Tom.
Did you?
That guy is huge.
You like looking up at him like,
10 foot tall. 10 foot tall. Walked into a bar with his girlfriend. I was looking the other way. The people I was with were looking at him. I wasn't. I was looking elsewhere. And they said,
"Oh, really?
So nice to meet you." And I was like, "Meet who?
Looking?
Meet who?" Clearly the other way. And I was like, "Meet who?" And a lovely guy. Lovely guy. I think he was with the Mets at the time. Maybe that was like 7 years ago, Tom.
You're nailing it,
6, 7 years ago, something like
Lisa,
that.
You know, it's just, but, you know, I'm worse than he is, actually, folks. Right now, we digress to commodities, and there's only one commodity that matters. Usually, with Kona Hack, head of research at ED&F Men, we talk about the softs, we talk about agriculture. Kona, I want to talk about Christian Malik and the smart people at JP Morgan who are modeling out the demand guess forward. If we get through lockdown in China and we get China demand back, what exactly does Brent crude do?
Yeah, that is the big bullish scenario that we have ahead of us. Because right now, yes, markets are slightly under pressure because of the Chinese lockdowns. But what happens when they come out of that? And add on top of that, the recent Politburo announcements about more monetary stimulus, you know, all of that can have a very bullish impact in terms of a rebound in demand. Just at a time when the US driving season starts, we know that Russian oil is coming off. So the markets are tight today, slightly balanced, depending on... Yeah, so it's. I think there could be quite a bullish impact in a couple of months.
Give us scope and scale on your guess here. I've got Brent crude now right at 106, and I don't need a single point estimate, and certainly not when. But if a demand thrust comes on, is it a $20 move or a $50 move?
No, I'd say at this point it's a $20 move. And the reason for that is we have to understand as well that these kind of inflationary pressures are having an impact on global growth. And so demand elsewhere is being crimped. So yes, you might have a sudden burst of demand in China, but at the same time, in other places, you are seeing slowing demand. You know, it is definitely, I'm not saying recessionary, but there are definitely some strains on parts of the economy, and I think there's going to have to be some restriction on energy fuel use.
We focus extensively on the price of oil. To a lesser degree, we focus on food prices, and yet a lot of people are getting increasingly concerned because even though oil prices have been bouncing around pretty aggressively with incredible volatility, corn prices, soybean prices, you're seeing the price of fertilizer continue to rise. Kona, how concerned are we or should we be about the trajectory here that has slowed a bit but still seems to be up?
It is up, and you know, later this week we're going to have the United Nations Food Price Index. I'm expecting another record high. The fact of the matter is, you know, for most of the developing world, food accounts for way more of their consumer price index compared to maybe even energy. So the implications on that on a political front is massive. You can't underestimate the amount of food protectionism that governments are likely to get into. There's going to be about food hoarding. There's going to be huge amounts of imports and then export bans. And we saw what happened in Indonesia, one of the world's largest producers of edible oils. They decided to ban their export at a time when Ukraine can't produce their sunflower oil. So these kind of supply risks, short bursts of supply risks, are going to cause so much volatility. And I fear that high food price is something we're going to have to live with for at least another year, because I can't see a recovery on the crops. The weather's not been amazing. US planting season's going off to a pretty rocky patch. And fertilizer prices, as you said, they're very high. So where do the incentives come to increase those yields?
Just looking out into the future and giving a timeline, when do you think we will see peak concerns about food inflation and the subsequent disruption socially that will ensue?
That's a really tough one. I would say we're getting to it now. That's why you're starting to see big reactions from certain governments like Indonesia. If more start to follow suit, I would say, I think we're maybe second half of the year, we start seeing more action by governments. And I think that's when you start getting almost to sort of crisis level.
Kona, awesome to catch up with you. Some really worrying stuff there in this conversation. Kona Hack there of ED&F Man. The numbers out of Europe today, PPI year over year, 36.8%. The estimate was 36.3.
What does that number mean? Come on, that number's like insane.
That's factory gate prices year over year, absolutely surging, Tom, in Europe. Month over month,
I honestly don't know what to do with that number.
Just massive, Tom. That's it, and that's the problem, isn't it? What do you do with that number? When does the translation from PPI to CPI start to slow down?
You wait. They're going to be massively, massively data dependent. There's 50 beeps tomorrow. It's a no-brainer. Easy to do. But then the data dependence clicks in, particularly for Christine Lagarde.
When do you think that clicks in? Because Bob Miller of BlackRock told me last week, Tom, that they haven't got the luxury of being data dependent. They're so far behind. They've got so much to do. They've got to wait before that clicks in.
My reading of all of them, including the wonderful Alan Meltzer of Carnegie Mellon, is they are always, in every case, data dependent.
The problem has been, though, Lisa, that they haven't been over the last year or so. They've ignored the data and hoped it would get better in the future, and it hasn't.
Exactly. So now what do they do, considering the fact that a big component of that is oil prices and gas prices? And how much does this really affect the political backdrop and the reason why there has been such reluctance to go harder against Russia? And I do wonder how this plays into that and how much the ECB defers to those negotiations rather than being overly aggressive now.
Oh, Jane Fraser of Citi said it, didn't she? It's very difficult to do this transition away from fossil fuels without generating an economic crisis. And not enough thought was put into that over the last few years when we had all this happy talk at conferences like the one we're at currently. Futures down 0.4% on the S&P. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The Fed right now sets the stage for the financial markets and really also for the economy.
In terms of the economy, we are beginning to see some slowing.
It's a rare occurrence, but it does happen where both the equity and the bond markets retreat.
There is a lot of hawkishness priced in here.
Risk on, risk off doesn't exist anymore now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What a week we've got coming up for you from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures turning a little bit lower, down 0.4% on the S&P. It's the big one tomorrow, TK. The Fed, then on to payrolls.
Yeah, the nuance of it is on to payrolls. And, you know, as Jan Hatzi has told us here a number of weeks ago, John, screaming he was standing up on the desk here, John, screaming about a fully employed America of those employable. And that's where we are, 3.5% employment. As we heard Conrad DeQuadros talk about in Ron Temple, the employment dynamic here is playing second fiddle right now. I keep my radar up on that.
And that's why people think, so many people think this decision tomorrow is so straightforward. Hike interest rates, start QT. Tom, you allude to something a little bit more complex further down the road. Do they have to make a call between supporting softening growth or curtailing inflation?
Well, that's down the road, and I'm going to go out to June 15, July 27th. Kieran sent me the guest list for tomorrow, John, the Fed meeting, while I was at the White House dinner. And I was sitting there, you know, over the wonderful appetizer that we had, looking at the guests that we've got coming on. And I'm sorry, it's just lights out what we're going to see tomorrow on our Fed show.
We've got a great lineup, Lisa, including Matt Lazzetti at Deutsche Bank, who's
leading
looking for some big moves on interest rates and the balance sheet over the next 18 months.
Some of the outlier cases over at Deutsche Bank, not necessarily his view, but the House view, is calling for 5 to 6% overnight rates and possibly to curtail inflation. I'm curious to see where the balance of risks lie in terms of how Jay Powell portrays this, how much they are concerned about inflation not coming down as quickly, and whether they adjust at all their forward-looking projections, because otherwise, how are they going to surprise a market that is baked in a lot in the near term?
You suggested it. David Volkers-Landau over at Deutsche Bank, hard landing. That's the view for them. Hard landing. Can they avoid that at the Federal Reserve?
A lot of that has to do with this question of how quickly inflation comes down, and that's why I was talking about what Ken Griffin said of Citadel over yesterday when he was talking about how this is really the key question for the Fed. Does inflation come down rapidly on a year-over-year comp level? If it doesn't, it's going to be harder and harder for them to avoid that hard landing.
So we've got a couple of things to do this morning. We've got to rattle through what's happening in the bond market, talk about a Federal Reserve onto payrolls Friday from Wednesday to Friday. And Tom, we've got to go down to Washington, D.C. and talk about something something hugely controversial breaking from Politico overnight.
Joe Matthew will be with us. I thought he was wonderful in the last hour. We're really going to focus here, folks, on the machinery of the Supreme Court as they stagger forward from what everybody agrees is a massive and historic moment in the court to see this breach of a draft, John, a February document. What is it, Lisa, 40, 60 pages? I can't remember right now. But the answer is, John, this is truly unprecedented, whether you talk to the right or the left.
A draft ruling rejecting abortion rights. And Lisa, what is more unprecedented, the leak or the substance of the leak?
Right now, you have a bifurcated media. And I will just say this, there's been a lot written that basically this polarizing topic that really divides the nation in two for Republicans and Democrats, liberals and conservatives. Basically, the liberals are focusing on the actual content of the decision. The conservatives are focusing on the unprecedented nature of the leak, the idea of whether it's trying to politically motivate people, whereas people on the left are basically saying, look, this is overturning a basic right at a time when a lot of other countries are moving in the opposite direction and actually liberalizing rather than trying to clamp down on some of these types of procedures.
We'll head to Washington in about 10 minutes' time. An important conversation coming up with Joe Matthew of Bloomberg a little bit later. Futures look like this on the S&P. We're down about 0.4%. On the NASDAQ 100, down 0.4% also. Yields very briefly through 3% on a 10-year. Right now, 296.34, lower by a couple of basis points. Crude softer too, a 103 handle on WTI. And euro dollar, look at that, Lisa. Just about holding on to 105 again.
Perfect, yeah.
Clinging to that, trying to make sure that it stays at that 105 level. We are watching that FOMC meeting that is starting today in Washington, D.C. As we do that, the moves in the market are just amazing to watch. Real yields, inflation-adjusted benchmark rates in the United States climbing to the highest levels going back to the height of the pandemic, above zero once again, and the pace of the move has been dramatic. People are now seeing the Fed as highly concerned about inflation and trying to get ahead of it with front-loading those rate hikes. You're seeing this also in the two-year yield, reaching the highs last seen in 2018. How does the Fed try to signal to the market how to respond going forward? The goal is obviously not to move anything, but they don't want to calm markets either. As you were talking about earlier, John, you want that financial restriction in order to engage some sort of cooling of the inflation. At 10 a.m., we get a sense of just how hot the labor market is. U.S. March JOLTS job openings come out, expected to remain near the highest levels ever in history, basically showing that perhaps the unemployment rate is somewhat below the 3.6% that is the official level, at least in a representation of how tight the labor market really is. And today I am watching what's going on in Europe. Ministers of the European Union are meeting in Brussels to discuss how to respond to the demands of Russia to pay for oil and gas in rubles. How do they deal with potential bans on these energy products? And this comes as BP reports earnings and shows incredible profits despite writing off more than $25 billion for the share that they offloaded in Rosneft. It just sort of highlights, John, the boon from the oil and gas prices that have risen so much to Russia and how Europe grapples with that amid so much political angst.
Some of these companies in the oil patch, and thank you, Lisa, Tom, delivering profits we haven't seen in a decade or so.
Oh, come on, explain this, John. Translate this for people. British Petroleum, which to me has always been the most interesting odd company, and boom, they come out, and I think 3 seconds later in London, folks, we need a windfall profits tax.
Well, trying to hide behind the
Translate that.
write-down. Trying to hide behind the write-down, but ultimately making a ton of profit. And Tom, that's the conversation there.
Well,
arguably the conversation here as well.
Yeah, I would, John. Let's not waste time here. This
Sure.
guest is so important right now.
Let's get to Mark Cabana, the head of US rate strategy at BofA Global Research. Mark, let's get the Bank of America view. It will be hard for the Fed to out-hawk the market tomorrow. Run us through it.
Yeah, that's right. We think, look, the market is pricing right now 200 basis points of rate hikes over the next 4 meetings. It's pricing in around 55 or 57 basis points for the Fed in June. So some notable odds of a 75 basis point rate increase at that time. And we think that, look, the Fed's going to deliver 50. They're going to try and be non-committal on the rate guidance thereafter, and then they're going to do QT. Now, what the market's going to care about the most is what are the odds of 75? And again, we think that Powell is not necessarily going to fan those flames. He's going to say we're data dependent. We're going to go meeting by meeting. And if we need to hike faster, we will. Very similar message to what he delivered at the last meeting. That, given how much is priced for the Fed, may end up looking a little bit dovish, or at least neutral to slightly dovish.
Mark, where is the consensus at the Fed? And more importantly, where is the division? And how will this chairman navigate that division in that news conference?
This is a Fed that's highly uncertain. It's a Fed that's been willing to provide concrete forward guidance because they just don't know how the world's going to evolve. And most importantly, they don't know how the inflation outlook is going to evolve. So it seems like the consensus agrees that the Fed needs to be at least at the Fed's nominal neutral rate, which they believe is around 2.25 to 2.5 by the end of the year. But then there's a wide range of views around where the Fed goes from there. Some want to be much higher in rate by the end of the year, while others, it seems, are a little less certain that the Fed needs to be outright restrictive. So over the near term, look, the Fed is going to deliver a string of 50 basis point rate hikes. We think 3, the market's pricing something closer to 4. But after that, it's really going to be data dependent. And we think the Fed would like to provide forward guidance. It's just that they're still very uncertain at this point in time.
So Jay Powell is going to give his press conference. He's going to answer questions, and then he's going to walk off, and he's going to check markets probably and get a sense of what the reaction was to what he said. What will he be pleased by? In other words, if the markets are calm, will that be a positive result for him?
I think so. I think that the Fed wants to stop being a source of volatility. Typically, over the last 3 rate hiking cycles, what you've seen is that you've seen implied rates fall come down as the Fed hiked. This cycle is very different. Implied rates fall has gone up. And with that, markets have just become a bit more volatile and they're swinging around a little bit more. I don't know that that's necessarily the role that the Fed wants to play. The Fed doesn't typically like to shock or surprise the market. They like to have their intentions well known in advance and then to follow through on them. And we think that that's ultimately what they're going to be trying to achieve here as they move closer to neutral. So calm market reaction, a limited market reaction is probably going to be seen as a win for Chair Powell when he walks off that stage tomorrow.
Mark, is keeping calm a policy error at a time when some people are saying that they need to shock and awe a market that is enabling the inflation rate to be and remain as high as it is?
Yeah, I don't think that they necessarily believe that we need to shock and surprise the market. They know that they need to tighten financial conditions, and by many accounts, they've already been successful given the forward guidance and what the market is priced to this point in time. But do they necessarily need to be swinging around the market and create a lot of uncertainty? I think that they would say that that's probably a step too far for them. And look, if they want a surprise, they'll keep going 50s and not stop by the end of this year. That would certainly help tighten financial conditions. But I don't know that the Fed is ready to commit to that yet, nor do I think that they really want to try and, again, create a bunch of volatility in this already very uncertain marketplace.
Mark Havana, awesome, as always, of Bank of America Global Research. TK, I can't get beyond the summer. So difficult right now to get beyond the summer. How does CPI come down through the next several months? Does it persist at a higher level? Does the Fed have to go even further in Q3? Q4. I think the back half of this year, we often say this over the last couple of years, the back half of this year is so uncertain because once again, in the back half of this year, we're waiting to see if the supply side heals. And given what's happening in China at the moment, good luck.
John, you know, I was just looking at this while you guys are going on with Mark Cabana, who's just absolutely wonderful. I went back to a paper from 25 years ago, Bennett McCollum, a giant out of Carnegie Mellon, and John, he says there, is the ISLM framework dead? What's the theory of this meeting tomorrow? What's the theory of the next 2 meetings? And the answer, John, there's no theory to that. I mean, I hate to say this. Rogoff's going to say I'm wrong. There's no theory to this. They're making it up.
Ken can tell you if you're wrong a little bit later. It's coming up. Looking forward to that. Marvin Lowe's coming up too in the next hour from State Street. Futures down 0.4 on the S&P, on the Nasdaq 100 too. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. There's a report that the U.S. Supreme Court is poised to overturn the landmark Roe versus Wade decision protecting the constitutional right to abortion, and that prompted demonstrators to head to the court Monday night. Politico says it obtained a draft majority opinion being circulated inside the court. The opinion was said to have been written by Justice Samuel Alito. The court is scheduled to rule in the case by July. British Prime Minister Boris Johnson will evoke his own country's wartime history today when he delivers a virtual address to Ukraine's parliament today. Johnson will echo the words of Winston Churchill saying, quote, "This is Ukraine's finest hour." Meanwhile, Johnson's government has announced a new military aid package for the Ukrainians. Russia's been able to sidestep its first foreign default in a century. Its closely watched dollar payments on 2 bonds are trickling through to investors after the country dipped into its local holdings of U.S. currency. 3 investors who asked not to be identified told Bloomberg their custodian banks had received payments. Citadel founder Ken Griffin said the Fed will be able to ease off monetary easing if inflation drops to 4% by year's end. But Griffin told Bloomberg that if inflation stays near the current 8.5% level, the Fed would have to, quote, hit the brakes pretty hard, tipping the economy into recession. The Fed is expected to raise rates this week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Will the Fed go?
I have everything on the table right now.
25 or 50 basis points?
If we think it's appropriate.
It could be 25, it could be 50, it could be 75, it could be 1.
We'll tell you what you need to know.
It becomes a question of how fast and how far do they go with rates.
Does he choose to de-emphasize parts of this forecast?
I'm blown away by the conversations we're going to have.
We're going to discuss all of this coming up.
Bloomberg Surveillance, the Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
There will be an increase in rates, and central banks, have a narrow path to go down without harming the economy, but also neutralizing inflation, which is having, a negative effect on consumers. But net rates will go up.
So big moves in this bond market in the last couple of days. That was Ana Botín, the Banco Santander executive chair from New York City. This is Bloomberg Surveillance, and your equity market is just a little bit lighter, softer, lower, negative 0.4% on the S&P. Yields coming in a couple of basis points to 296 after having a little look at 3%. Euro dollar has had a little look at 104 a few times now, 105.03. That currency pair, Tom, on the day unchanged.
It's going to be interesting to see. And, it's going to be really eventful, folks. Really stay with us through Friday in the jobs report as well. Right now, we continue our discussion on what Politico wrought last night. It has riveted America. Our Joe Matthew, of course, providing leadership on this look, 5 p.m. Tonight, Sounddown, where he'll drive forward the conversation. Joe Matthew, I want to go back to Noah Feldman, professor at Harvard, in his magisterial effort, Scorpions, which really lays out the modern Supreme Court with a dose of history back 200 years. Linda Greenhouse drives forward this about the left, the right, and the center in a wonderful moment in Charlottesville at Virginia, where she's now. This is the Times reporter who is now teaching at Yale and at UVA, I believe. Linda Greenhouse. There is no swing justice. I think a lot of people aren't used to there not being a swing justice, so they keep looking for one. They think they found one in Brett Kavanaugh or the Chief Justice Roberts. Of course, folks, that going back to the Obamacare shift. We don't have a Sandra Day O'Connor or an Anthony Kennedy, whose vote was actually in play on important things. And I would add there, Joe Matthew, Whizzer White as well out of Colorado. Joe Matthew, where's the middle ground at this Supreme Court?
Well, it's true, by the way, that it's true to point this out, but is Chief Justice Roberts not the swing? We have to remind everybody that he is, in fact, not counted in this draft. So we don't exactly know how he would vote on this. And my goodness, it speaks to the striking, Tom, and widening cultural gap in this country, widening being the key word. We've known for years that America was split down the middle politically, but the gap is getting wider. As you see states enact abortion bans, and quite a number of them now, 6 so far this year, other states are driving in the opposite direction. Connecticut is widening the pool, at least lawmakers have approved the bill that would actually expand the pool of people who can perform abortions. Vermont is amending its constitution to guarantee the right to an abortion. And in California, they're making this state a refuge in their terms for women seeking abortions from other states. How this ends is impossible to predict, but we're watching a nation drive in 2 separate directions.
Joe, I want to get this done quickly because I know Lisa, with some real expertise on this, has a bunch of questions. Joe, the issue here is it's a February draft, and we are 67 days on. Do you assume in your reporting or experience that it's already been amended as we speak, but they can't talk about any amendments?
Great question. Entirely possible, as these are typically changed significantly by the time we see a ruling. This may not, for all we know, reflect where the court is on this. Although with such a massive issue here, Tom, I can't imagine that justices are vacillating on their opinions here on Roe v. Wade. But it is true that votes can still change, and we could wait until July to get a final ruling on this.
Joe, there's a legal aspect of this and the questions around the Supreme Court. And then from a markets perspective, some really interesting political questions, especially heading into the midterm elections. How does this change the nature of campaigning with such a long runway ahead of those elections with such a polarizing issue?
Well, the campaigns are going to be listening very closely to voters here. And by the way, this is a primary day. We're watching races in Ohio and Indiana. It's really going to be more of a general election issue, though, because obviously most candidates within their respective primaries are probably going to agree on this. But to think that these elections could well be decided by culture wars is remarkable in a year that we have a war in Ukraine going on. We have historic inflation and huge concerns about the recovery from COVID. Those were, and until now have largely been, the issues driving the discourse. But now it's about what? Disney versus Florida. It's about gender rights. It's about critical race theory. And you add abortion so as the ultimate third rail controversial issue in politics here. And this is turning into a very different campaign cycle than it appeared to be at the beginning of the year. I don't know how people are going to weigh in on this, but it is absolutely going to increase turnout for Democrats. I don't think there's any doubt about that right now, Lisa. This is going to get people motivated. Whether it changes their votes, we'll have to wait and see. But it's going to bring people to the polls, and I suspect it will bring people to Washington, D.C. I don't know how long it'll be, but there's going to be a march in this town, the likes of which we may have never seen.
Joe, just real quickly here, which are the races to pay most attention to as bellwethers of exactly the dynamic you're talking about?
Well, it's interesting. It's many of the same races we would have already been watching. Pennsylvania, Georgia, Ohio today is also one of them. Arizona, New Hampshire. These are the states that are likely going to decide control of the Senate. How it will impact races down ballot, though, could be the story, Lisa. Gubernatorial races are going to rise to the surface on a more national conversation. And within each state lawmakers are going to have a lot more to talk about here, because it will, in fact, if this goes forward as the way it appears to be in this draft, it will be the states, once again, deciding how to regulate or whether to prohibit abortion, and those elections will speak directly to those decisions.
Joe, just quickly, if Matt Dolan gets it done in Ohio, how important could that be going forward?
Well, that's interesting, whether or not we get a spoiler. It's a lot of folks are framing this, Jonathan, as a test of, Donald Trump's kingmaker status as he went for J.D. Vance, who was vaulted to front-runner status here simply because of that endorsement. But he's got a very close challenger in Josh Mandel. Interestingly, Donald Trump screwed up the name of J.D. Vance on Saturday night, referred to him as J.P. Mandel. So there is actually some confusion as to who is closer to Trump and who Donald Trump wants. But yes, this Matt Dolan, interestingly, the one candidate who has kept a distance from Trump and has not suggested that Donald Trump won the election. It'll be interesting to see if these frontrunners might cancel each other out to the benefit of Mr. Dolan.
An important race. Joe Matthew in Washington. Joe, looking forward to the show. Really am. A little bit later. Bloomberg Radio, weekdays, 5 p.m. Eastern Time. Do not miss Sound On. Tom, some important races we need to keep an eye on.
Well, they start, as Joe mentioned here today, and on we go. But I'm sorry, John, politically in this nation, particularly for our global audience, everything changed last night.
How much has changed, Tom?
A huge deal. This goes back, as Joe mentioned, and of course our theme at Bloomberg is to stay out of the political debate on it. But we will cover both sides of this debate, and both sides are evident.
The issue with subjects like this one is you stay neutral, and people assume you've picked a side because you haven't picked theirs.
Yeah, that would be front and center. What we've got is a great legal team at Bloomberg Opinion to give us perspective.
Futures negative 0.4% on the S&P. From New York City this morning, good morning.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Nice finish going into the close in yesterday's session. A pullback this morning, though, by about 1/3 of 1%. No drama on the S&P, on the Nasdaq too. You know the battle of the South Side, JP Morgan versus Morgan Stanley. Morgan Stanley and Mike Wilson and the team think the bear market is incomplete. And then you've got Marko Kolanovic over at JP Morgan, who thinks we're being too negative on equities and credit as well. Reach out to your representative from either bank as you like. That's the equity market. Let's talk about the bond market. Morgan Stanley have got a really interesting view on a yield curve. They think you should keep a bias towards flatteners. They think the pressure remains at the front end, yields up, and they think the long end remains range-bound because of growth risks abroad. Think China. I think the call on the long end gets a little bit more interesting because that would make sense coming into last month, but then yields broke out again, and they broke out a little bit in the last 24 hours, through 3%. For the first time since 2018, we pull back just a little bit. The curve is flatter on the session by a basis point on a 10-year, lower, up a couple of basis points at the front end, 296.92 on 10s. I want to talk about Europe too, because in Germany we broke out on a 10-year yield through 1% for the first time since 2015. Now, if you go back to Germany in 2015, why is that interesting? Because what we had from the ECB in 2015 was the start of sovereign debt in the asset purchase program. Tom Keane, this time though, the euro is weaker as they are unwinding QE, not building it out. That's why the relationship between yields and the euro in Europe gets a little bit more interesting.
John, have we seen any research that cuts below parity? I mean, the weak euro 105, 103.
I haven't seen it the same way we did maybe 5-7 years ago, Tom.
Exactly.
What's interesting here is that 103 was the low, late 16, early 17. Very close. We've had a look at 104 a couple of times, but as I say, back then, a weaker euro was an objective. Lower bond yields, that was an objective. And now yields are breaking out, but the euro's not coming along for the ride. And Lisa, we've got to be very, very focused on what's happening there.
Honestly, how much can the Fed get ahead of what's going on with the euro? How much do they respond to it? If they tighten, what does that actually do to a euro that is responding most of all to growth?
That's the cross-asset price action. Let's get you some single names. We can catch up this morning with Katie Lyons. Good morning, Katie.
Good morning, John. Well, a lot of earnings are still rolling out this morning, including from Pfizer. The issue really wasn't the first quarter, but the outlook on revenue overall and for Paxlovid, its COVID-19 treatment. That revenue guidance coming in a little light. Remember, Paxlovid in a trial they announced last Friday did not actually prove effective in preventing COVID-19. That stock is down about 0.7%. You also have Biogen moving lower, more than 1% at this point. Not so much about the results they reported, but the other news, including that they're going to substantially unwind the infrastructure for Aduhelm. It's Alzheimer's drug. It also is looking for a new CEO. Finally, pointing to Estee Lauder, down 9.6%. Big cut to their earnings guidance. The company blaming headwinds from China and the COVID-19 COVID-19 lockdowns there, as well as the war in Ukraine. You also have a number of stocks moving on the back of analyst downgrades, one of them being Kellogg. Piper Sandler cutting this company as well as Tyson due to inflationary headwinds, changing consumer habits potentially, as well as rich valuations. That stock is down 2%. DocuSign down 4%. That after a downgrade over at Wedbush. Dan Ives, the analyst there, saying that this is one of the areas of the tech space that is going to have more pain, a have-not in tech, if you will. Finally, Carvana also down the better part of 5% after getting cut over at Wells Fargo to equal weight. Remember, this stock down 83% since its peak last August, Tom.
Carvana, come on, Kaylee, help me with this. It operates an online platform for
the
buying
towers
used
of cars, Tom. Very popular during the pandemic. This was one of those plays that did really, really well, but a story that has changed dramatically as the world kind of emerges from the height of COVID-19.
Yeah, it's a font of free cash flow. Kaylee Lyons, thank you so much. Let us not forget Kaylee Lyons, crypto. Is this today, Kaylee?
It is, Tom. 1 p.m. Eastern time, right here on Bloomberg TV. Thank you very much for the plug.
Crypto, 38,000, John. I mean, John.
Why do you seem so confused by this? What are you confused by?
I'm not confused. I canceled the surveillance app to watch crypto.
You are going to watch it. Is Matt Miller back?
Matt Miller is not back. Kriti Gupta will be in the hot seat today.
Oh, you're not flying solo. That's important.
Yes.
You've got friends.
Okay. I've got friends.
Looking forward
lots
to
of
it.
friends.
I know you've got lots of friends. Just on the show. We don't have to get too deep about this. It's not going to turn into a therapy session on Bloomberg surveillance. Katie, thank you.
I have friends. Laura Rahm is like, why am I on?
Laura's got friends too.
Exactly, we're
Chief
friends.
US Economist. Laura Rahm joins us at FS Investments right now, and this is really wonderful because she's doing the whole wheelhouse economics. But in her research note this week, Laura Rahm, with a vengeance, goes back to her true foreign exchange expertise. Laura, I love in your note how you do what I scream about 24/7. You can't do a pair on exchange analysis. You have to triangulate. How do you triangulate dollar right now?
So you triangulate it versus some of the organic moves that are going on versus the majors in Europe, where we just are clearly not going to get the growth expectations. And I think there's still a lot of expectation that the European central bankers aren't going to be able to be as aggressive as they want to. But then you need to triangulate it against other dollar strength, for example, against the renminbi, where there's clearly a strong political element to the fact that the Chinese are weakening the yuan as almost an emergency stopgap because their economy is slammed to a halt. They've only gone 4% so far, but I think the question we all should be asking ourselves right now is not, will the dollar get stronger, but when will it become a political problem? When will it become a political hot potato?
Which levels of that are important within your economics remit at FS Investments? Which levels on dominant euro and dominant yen, when you triangulate, are important? May I suggest for conversation a 103-week euro and a 132-week yen, or do you have different levels in your head?
No, I mean, I think, you know, to me, it's about the level, but it's about the speed, Tom. And when you see, especially against China, when you see these big gaps, you know, that could go, to me, much further. And given the fact that we just had this blowout trade deficit in the first quarter, you know, does trade really enter the political discourse again in force as we enter the midterms? So I think, you know, the levels that we look at, clearly 103 is going to be very important given the historic floor there. But when you think about, you know, to me, it's this move recently has been about the speed because the dollar has played catch up really fast.
I'm glad, Laura, that you're focusing on the dollar because perhaps there hasn't been enough talked about with respect to this, given the fact that everyone's talking about hiking rates and people are talking about the jobs momentum, et cetera. How concerning is it to the Fed to see a dollar strengthening not only to this level, but at this pace, as you rightly say, given the fact that, frankly, not only does it deal with trade, but it also creates a lot of disruptions globally in developing markets in particular and just slows the global growth trajectory that much more?
Yeah, you know, I think right now, the dollar that is strengthening really acts upon the economy like higher interest rates. So right now it's reinforcing the direction that the Fed is going in. And clearly, given that they're front loading their rate hikes, you know, we're going to get that 50 basis point rate hike tomorrow, probably another one in June. They're trying to really tighten conditions fast in the first half of the year. I think the second half of the year, it gets more precarious. And I think at the end of the day, we also have to think of the connection that this gives us to equity markets, right? I mean, companies with foreign revenue exposure are underperforming now meaningfully over the last 2 months, companies that are more domestically focused. And that's just one more thing that's hitting these big sort of international large caps.
Yeah, we actually saw that with Coca-Cola and Pepsi in particular, talking about the write-offs or the losses that they took as a result of the strengthening in the dollar, although that's always, of course, a bit of a red herring to possibly mask other weakness is always used in the earnings season. Going forward, what is your level of concern about how much a globally slowing economy can really impact the U.S.'s, when so far there has been a feeling that China and Europe has a marginal effect, but on a major one in slowing the U.S.?
Yeah, this is always the paradox because the Fed is unique among central banks in really just almost entirely focusing on the U.S. And so I think for their trajectory, again, the first half of the year, this doesn't really change very much. But I think the second half of the year, it makes it more difficult for them to meet the bogey that the futures curve has set for them. We are just getting this sort of shift in demand dynamics within the U.S. economy, and all of a sudden you look across the globe, global forecasts for growth are being revised down, region by region, country by country. And of course that impacts things on the margin. And you get our trade deficit is just so large now, it's blown out so much. As we restock inventories, how much of that is going to come domestically and how much is going to be imported? You may get GDP numbers that just don't reflect the robust level of the unemployment rate, of other factors, and the Fed it gets more difficult for them to really sell these rate hikes, especially if inflation is moderating.
Lara Rain, good to hear from you of FS Investments. And on that last point, Lisa, I think that is the dilemma for this Federal Reserve into this meeting, in this news conference. It's going to be difficult to out-hawk the market, one, but two, undesirable to under-deliver. Because right now, you don't exactly want a loosening of financial conditions, given what inflation will look like for the next couple of months.
It's such an important point that they want to keep things steady. They don't want to do too much in either direction. But if they don't perform with enough aggression, that will be underperforming market expectations. So how do they achieve perhaps a status quo at a time when there is such a polarized view on Washington? And not in Washington. I'm so used to saying polarized view
well,
on
Washington.
Well, there is in
Washington too.
Sure, but on Wall Street, Wall Street, with respect to how far and fast the Fed has to go.
The good thing that's on their side, I think a blessing this week, is they don't have to make forecasts. There's no dot plot.
Yes.
They get a few more inflation prints, Tom. We keep going through the calendar, May 11th, June 10th, and then they get a meeting on June 15th where they can put out the forecast, reassess how inflation has come down. If it has indeed come down year over year, we expect it to over the last few months.
John, you just described data dependency, and they will reinsist. And the only debate here is the ex-postedness. I've just invented that. The ex-postedness that they will.
It works, Tom.
Does it?
See what Ken Rogoff thinks of that. The professor of economics at Harvard University.
My
joining us
Latin.
A little bit later on the ex-postedness. Is that right?
Yeah.
Is that you going with that? Okay. Yeah. All right. Futures down about a third on the S&P, on the Nasdaq, negative a third of 1%. Also, yields on a 10-year down 2 basis points, 296.34. This is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Rishika Gupta. There's a report that the U.S. Supreme Court is on the verge of overturning the Roe versus Wade ruling that legalized abortion. That prompted protesters to turn out at the court Monday night. Politico says it obtained a draft majority opinion from Justice Samuel Alito. According to the publication, Alito writes, quote, Roe was egregiously wrong from the start. If the court does overturn Roe, it could reshape the battle for control of Congress this fall. The Bank of England is expected this week to raise interest rates to their highest level in 13 years. It may also clarify how it plans to sell some of its $1.1 trillion in government bond holdings. That would take the UK's central bank into uncharted territory. None of its major economy peers have yet sold government bonds accumulated under quantitative easing since 2008. And it's the largest move by Wall Street's main regulator to crack down on digital tokens that may break the rules. The Securities and Exchange Commission is adding 20 more officials to a team dedicated to policing crypto markets. SEC Chair Gary Gensler has said he considers many digital assets to be securities and subject to his agency's rules. A bipartisan group of U.S. senators wants to loosen Google's grip on the digital market. Bloomberg has learned they plan to introduce legalization that would force Google to sell off parts of its lucrative advertising technology business. The measure could also have implications for Amazon and Facebook parent Meta platforms. Global News 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
months of work, I can say Germany is not against an oil ban on Russia. Of course, it is a heavy load to bear, but we are ready to do that.
The German economy minister, of course, most people assume the heavy load to bear would be doing something about gas and not crude. We can get into that in a moment. Futures negative 0.2 on the S&P. The Nasdaq 100 down 0.25%. Yields coming down a couple of basis points on the 10-year, 295.95. I've got to say, Tom, to hear the German economy minister talk about a heavy load to bear, we've had the compare and contrast between what Greece went through in the Eurozone debt crisis. I'm not sure you can compare banning Russian crude as a heavy load to bear, given what some of the southern European countries have been through over the last 10 plus years.
You're more wired into this than I am, but can we state it's clumsy?
It's more than clumsy.
Yeah.
It's totally out of touch. And I'm surprised, actually, that the Greeks and the Italians, the Spanish, the Portuguese, the Irish haven't pushed back in a bigger way against some of this. I haven't heard enough of that. I mean, I know we've got to keep unity in a moment like this one, but I've been surprised.
We will see. We're going to be surprised now by someone always on Kriti Gupta here with an important chart on America domestic gasoline use. Kriti?
Yeah, Tom, as we talk about the FOMC tomorrow and just how much the American consumer can withstand in terms of inflation, but also in terms of the Fed policy, we got to talk about energy specifically. Higher gas prices, I believe over $5, look, according to AAA, when we're looking at national gas prices. But how much of that is actually being, or how much of that spending is made up of the disposable income? And this is really an interesting chart for our radio audience. Stick with me. Going back to the 70s, the average consumer at the peak of that high energy inflation spent about 6 to 7% of their income on energy. That number is now 3%. That's even lower than what we saw in the early 2000s, which was upwards of 4%. So this is really important as we talk about higher energy prices and how much specifically the lower income is spending on those gas prices. Put this into some context. If we're making comparisons to the 70s or even the 2000s, the first 50 basis point hike expected since May 2000 tomorrow, we got to put this into perspective and say that, well, energy spending is actually at its lowest going back to at least the 70s.
Kriti, thanks so much. Greatly appreciate that this morning. Right now we pause, and those of a certain vintage, John Farrell may remember this from Ute, was 40 years ago tomorrow. We're going to be distracted by the Fed tomorrow, but it was 40 years ago tomorrow that our modern invincibility of war was taken away by an Exocet missile in the Falkland Islands. And it was the HMS Sheffield, which of course speaks to the modern moment of the Moskva of the Russians sinking here in the Black Sea a number of days ago. Maria Tadeo joins us on Expecting the Unexpected in Brussels this morning. Maria, I will never forget the sobering moment 40 years ago tomorrow of the Sheffield sinking. Just absolutely extraordinary. Help us here with the next unexpected in Ukraine. What are you studying?
Well, Tom, first of all, I think there's a lot of nervousness around that Victory Day parade. Now, for Vladimir Putin, we talk about how he needs to show something to his people and how he needs a quick victory somewhere, one or the other, somewhere in perhaps Eastern Europe, the Donbass, Crimea, and so on. We've talked about this for weeks, but I think it goes beyond that. This can really be a moment in which Vladimir Putin speaks to the Russian people and says, at this point, it's not just a special military operation. This is full-on war with Ukraine, but also the West.
I don't mean to interrupt, Maria, but come on. Are they listening to him?
Well, Tom, do they listen to Vladimir Putin? Many do seem to support him. Many do, and I think that's the biggest question, and we don't have an answer for in the West. Is this Russians who are brainwashed, or is it actually Russians who listen to Vladimir Putin and they feel what he says and he taps into that very patriotic history that they have of many Russian people that will tell you we have a special path in the world. Russia's a country like no other, and a lot of this has to do with defending that. What a lot of Russians also may believe, what is going on in Ukraine is not just a strategic fight, but it's also a fight for the soul of the nation of Russia. This idea that Ukraine has become corrupted by the West and that this is something that should have never happened because Ukraine in many ways is Russian. Of course, Ukrainians will tell you the opposite.
Maria, let's talk energy policy. Every single commodity expert we speak to on this program would say that oil is not the big deal for the Europeans, it's gas. So when the German economy minister says things like, I can say Germany is not against an oil ban on Russia, of course it is a heavy load to bear, but we're ready to do that. Does anyone believe that it's actually a heavy load for them to bear?
Well, it depends, Jonathan, because we talk about gas as being that big geopolitical weapon. The biggest strategic failure for Germany was to give those contracts out to Russia. The German political class, by the way, I would say it's being criticized, and it's going through this implosion in real time. When you look at the German president, who's not welcome in Ukraine, when you look at all of the heat the German MPs are taking here in the European Union, I would say that, yes, oil perhaps it's not that big a deal compared to gas, but all of this is having big implications on Germany, and this is a moneymaker for Vladimir Putin. It's not gas, it's oil. Gas, he uses it for politics. In terms of is Germany doing enough? Well, of course, at this point, you could argue the damage is done. You can't undo 10 years of policy in which Angela Merkel pursued trade above everything else, in which she made no separation between the politics and the economy, and all of this is coming now to bite Germany. This is the cost of bad policy, but is this something that Vladimir Putin will resent?
But what is the price, Maria? What is the price? I know this is not an imperfect example. It's not the perfect parallel, but what is the price? They're talking about a heavy load to bear. Are they forecasting the kind of GDP revisions that Greece was 10 years ago, when they had to make massive adjustments to their fiscal stance, massive adjustments in their economy? Unemployment absolutely surged. It's a generation of people who left university and didn't work, couldn't find a job in that country. They're still grappling with the consequences of that. When you get a German politician saying things like, there's a heavy load to bear, what's the heavy load?
Look, you're right. When you look at Greece, when you look at all of the impact of austerity, when you look at the fact that it was Angela Merkel who jumped on a plane across these capitals saying the faster you do it, the less it's going to hurt. Well, a lot of those Southern European countries will now say the same thing. The faster you move away from gas, oil, the less it's going to hurt. And maybe you do need to take a recession, just like we took that recession. But I think, Jonathan, at this point, Europeans are trying to stay away from that fight. They want to continue with this unanimity. They want to continue with that almost joint front in the Russian aggression. They believe politically is important, but I think you're very right. Germany does need to do a lot of soul searching here. Angela Merkel could do no wrong for 10 years. She went unquestioned repeatedly. When you look at where Germany is right now, it is very clear the big mistakes were made, and that perhaps, Germany has to pay a price for it. The issue is that for many Germans, they feel that is not fair. They're doing everything that they can, and that moment, that mea culpa, hasn't really hit the country yet.
Maria Tadeo of Bloomberg in Brussels, thank you. Lisa, controversial, some might say out-of-touch comments from German politicians more recently.
Yeah, and that's a reason why perhaps they have been banned from visiting Ukraine, from Kyiv, which has been a political popularity recently. I do think about, though, the popular vote in Germany. How much support is there for a gas ban? How much is there a support for changing policy now in the face of Russia, even if there is this tension that is growing between Ukraine and Germany?
Well, they changed their views on the fiscal path.
Exactly.
For the whole of Europe. This is not about punishing the Germans because they punished the Greeks. It's about whether they're actually looking to learn the lessons of what they did to the Greek economy and perhaps do something for the whole of Europe. Not talk about a heavy load to bear, given what's happening around the world right now. Futures down a 10th on the S&P from New York City. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
They're going to hope that they can tame inflation without killing off the business expansion.
Obviously, we think they go 50, probably 50 in June as well.
You're going to get rising rates. You're going to have sustained high inflation. You want to tilt towards value.
Where I'm concerned more about China is the effect of a slowing China has on global growth.
Long term, the concept of the fear of missing out and Tina is being now replaced by the fear of inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thank you for joining on radio, on television. 8:31 Friday morning, John. What will be the state of play?
390,000. That's the estimate on payrolls, Tom. The previous read 431. Unemployment maybe at 3.5%. The data pretty decent. The earnings so far so good. The fears about the future and this Federal Reserve, whether they have to respond to those fears about the future.
Right.
In the next few months. Most people assume they won't. It's hike, hike, hike through the summer.
We're getting ahead of the story, and of course, Wednesday, tomorrow, that Fed meeting, John. And I'm sorry, Jerome Powell's looking at a fully employed America, that according to too many voices.
He is, and that's why he's set to hike rates 50 basis points, and then maybe 50 basis points again, and then let's see what happens, Tom. Things get interesting towards the back end of the year. We keep talking about this. He believes this economy is strong, resilient. He can hike rates maybe 50 basis points tomorrow. Does he have that view further down the road? And will he be faced with the ultimate dilemma? Growth that is weaker, the jobs data that is going the other way, maybe unemployment starting to climb, and yet inflation is still problematic. Does he have to make a choice between the two?
John, I got some outrageous feedback on the Mets-Yankee thing. We'll talk about that later in the hour here. The Mets and the Yankees killing it through the month of April. But far more, John, I got a feedback on a 4% 10-year yield out spring of next year. Is that where Bill Dudley is? Is that where Dr. El-Arian is?
He might be there, Bill Dudley, on the Fed funds rate. Mohamed El-Arian is not. Mohamed thinks that push comes to shove, they choose to support growth over curtailing inflation, and maybe that's a choice they have to make further down the line. On the yield curve, Morgan Stanley, their view is at the front end, upward pressure from the Federal Reserve. At the longer end, a range-bound 10-year, perhaps, contained by growth risks from abroad. How the long end evolves, though, has been the uncertain one for me, Tom. I was surprised by last month, where yields started breaking out at the long end on a 10-year, and that steepness returned.
Well, we see the steepness, 20 basis points, 2-cent spread, and of course the real yield with a magical move again to positive as well. And Lisa, it just sets up a jumble for May.
It sets up a jumble at a time when people see the risks of both inflation and a recession as so massive and looming in the view. The idea of front loading, I wonder when we get the shock, right? Have we already seen it in terms of some of the equity valuations, or is it yet to be seen? And this, to me, is one of the biggest disagreements with the likes of Morgan Stanley and Marko Klanovic, who I will say is a consistently bullish voice out of JP Morgan. How much can you continue to see disruptions as people look at a Fed that it doesn't have the same reaction function to market disequilibrium as it's had in the past?
Lisa, I've got to have you comment on the news overnight on the Supreme Court, the leaking of this draft document. They didn't have a leaking of a Supreme Court document in your undergraduate work at Chicago, did they?
Well, there have been some precedents in the past in terms of leaking Supreme Court drafts, but this one is particularly notable and one of the most notable and high profile in recent years, if not the only one in recent years. The idea here of the likely overturning of national abortion rights in the United States, likely to galvanize the midterm elections in ways that perhaps hadn't been before. From a market perspective, Tom, this is going to change the dynamic of the midterms, and that could have real implications that are different than just yesterday.
Publishing, I'll get it out on Twitter here in a moment. Bloomberg opinion moments ago from Stephen L. Carter, as we heard from Noah Feldman about 2 hours ago. We'll get the Stephen Carter essay out to you as quickly as we can. John, we've got to go back to the data. I'm going to look at oil, John. I've got 107 a barrel, and many other people looking for a lift there.
104 on WTI. I'm looking at a bond market that starts to fade just a bit. We saw these big moves on a US 10-year through 3% for the first time since 2018, on a German 10-year through 1% for the first time since 2015. Your 10-year yield in the US right now coming in 3 basis points to 295.17, and euro dollar just in the last 20 minutes or so, Tom, starting to see some euro strength come back through. Euro dollar positive 0.4%, 105.48.
Stephen Carter, inflammatory here, John. Leakers are liars. We'll have to get that out here on, of course, the issue in America of the moment. Right now, we stay on plan with economics, finance, investment. Yes, international relations. We'll talk of Ukraine here in a moment. Marvin Lowe briefs a senior global market strategist at State Street. Marvin, I want to go to one sentence, one phrase in your important Fed note on shareholder-friendly initiatives, which is my core belief that corporations will adapt to what's handed to them. How will corporations adapt to what the Fed gives them?
Yeah, well, certainly, certainly the earnings profile is still supportive. So they do have flexibility ultimately. They've restructured their balance sheet to a point where the short-term rate impacts on the balance sheets are limited. So there is some flexibility. Just to say that they're going to stand by the sidelines and not be able to address anything, I think ultimately it's simplistic. These are corporate boards that have spent a lot of time navigating a lot of the volatility that the world has thrown at them, and certainly their cash flow still is supportive.
Marvin, margins were pretty good as well, and that's something that's held up in a way that I didn't anticipate. If you told me that this is what we'd see with inflation, with labor costs, I would have expected margins to start really getting a little bit more messy. Do you expect any of that in the coming quarters?
I think it's going to be more challenged. Absolutely. Particularly as we get a little longer in the tooth with these supply chain issues. We certainly heard from some big companies that had started to really feel the supply pinch, even though they managed it fairly well over the course of the last year. So it definitely is a headwind. Whether it really evolves to shrink growth is probably something that the market is not pricing, even though we've had as much of a retracement in valuations as we have.
Has the market really priced in, Marvin, a much more hawkish Fed and possibly 3 or 4 consecutive 50 basis point rate hikes?
I guess it depends what market you're talking about. Certainly on the fixed income side, we're struggling and challenged by this. I do believe that we've got peak hawkishness in a lot of what we're starting to see. On the equity side of things, I think that there still is a somewhat rosy outcome in terms of soft landing or just a minor type of recession that might evolve from this Fed activity.
Can you elaborate a little bit in terms of where the biggest mispricing is between the rates market, what they're predicting going forward, and certain pockets of the equity market that still are counting on a soft landing that perhaps others in rates aren't seeing as much?
Yeah, I mean, certainly the talk within the rates world has been the risk of recession. And when we're talking about an overheating economy and growth that remains strong, the probabilities remain low from that perspective. But certainly the shape of the curve and just how aggressive these central banks are expected to be over the course of the next year has to increase those recession risks. We're still trading at 18 times multiple. Certainly it's come in a lot, but it is closer to averages over the last 10 years. So that risk isn't being made in the market at this point. Having said that, there certainly is a rotation. NASDAQ is underperforming. That kind of plays into that. But overall valuations, while better, are still relatively high if you have a fairly concerning growth outlook in your cards.
What's the required dynamic for the Fed put to come out of retirement, Marvin, in your opinion?
I think we have to get through the next few months and start to see this inflation discussion start to moderate before we can even talk about Fed puts. Certainly liquidity within the Treasury market is always an issue. That will bleed into much more volatility in the equity market, but we're not there yet. And normally one would expect that somewhere around 20% we would be there.
Marvin Lowe of State Street. Marvin, thank you, buddy. Ahead of the Federal Reserve tomorrow, payrolls on Friday, and a difficult period for markets over the last few months. Lisa, the Fed put is firmly in retirement, given where inflation is currently.
It is in retirement. It's a question that I have in terms of how much they want to actually ignite some more volatility. I mean, if we do not get more volatility than what we've seen, is that a policy failure at a time when what is their transmission mechanism of tightening monetary conditions? I really do wonder, financial conditions, I should say. I do wonder if they are pleased, in fact, with some of the sell-offs that they have seen rather than disturbed or looking to come in and stop it.
Estee Lauder just came out, falling in the pre-market by quite a bit. The reason I bring this up, Tom, they've had to cut their outlook, and they've attributed it to everything we've been talking about. Store closures, supply chain disruptions in China, higher costs, disruptions in Europe due to Russia's invasion in Ukraine. I mean, you just fold in the dynamics of the moment into the earnings story, and there's a stock that's really struggling.
Well, and again, John, this goes to what you've beat me up about, which is to say, yeah, there's been some high flyers that have done okay. They're down, but there's a lot of people that have been absolutely hammered within this, which, as Mr. Buffett once said, the water goes out and you see who's got a swimsuit on.
The stock is down by about 9%, Lisa. A struggle for that name.
Which is interesting also because how does it fit into the luxury complex, right? It's a makeup and facial care goods company. How much does that speak to the narrative where we've seen luxury producers really kind of be the outliers for so long? Is that changing? Are people pushing back on some of those discretionary expenditures?
A $93 billion market cap, you forget that, but there you go. Anyway, just wanted to bring that up just
Have
for
you been to
Tom.
Sephora?
No, Tom's big on that. Tom's big on that. Tom knows all about that brand.
I mean,
that particular store.
There's a conduit for the.
How do you feel when you get dragged to Sephora, Tom?
Well, no, the new thing is vintage clothing. Vintage clothing is I expect to see whoever going. Can I mention here, as we were talking about Lisa and the Mets, equal opportunity. Doug Cass emails in from Florida, says, John, the Yankees talk is just stellar.
Oh, I'll bring the Yankees talk back.
He just loved it. Then there's, of course, the known world saying, Tom, shut up about the Red Sox.
There's a struggle, Tom, for you. I know. We're going to spend a lot of time talking about that through the summer. We'll have fun with that. Yields come in 3 basis points on a 10-year, 295. Futures unchanged on the S&P, recovering just a little bit in the last couple of minutes. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. There's a report that the U.S. Supreme Court is poised to overturn the landmark Roe versus Wade decision protecting the constitutional right to abortion, and that prompted demonstrators to head to the court Monday night. Politico says it obtained a draft majority opinion being circulated inside the court. The opinion was said to have been written by Justice Samuel Alito. The court is scheduled to rule in the case by July. In Hong Kong, the economy shrank more than expected last quarter. Gross domestic product fell 4% in the January to March period from a year earlier. Local restrictions to curb COVID hit economic activity, plus China's own Omicron outbreak disrupted trade. British Prime Minister Boris Johnson will evoke his own country's wartime history today when he delivers a virtual address to Ukraine's parliament today. Johnson will echo the words of Winston Churchill saying, quote, "This is Ukraine's finest hour." Meanwhile, Johnson's government has announced a new military aid package for the Ukrainians. Shares of Western Digital jump before the opening bell. Elliott Investment Management is urging the company to conduct a full strategic review and separate its flash business. Elliott manages funds that have about a $1 billion investment in Western Digital. And Pfizer has kept its existing outlook for sales of its COVID vaccine and treated unchanged. That's disappointing investors who looked for the products to drive growth. Through mid-April, Pfizer said it has clinched $32 billion in 2022 contracts for the vaccine and $22 billion for its COVID pill. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
High will the Fed go?
I have everything on the table right now.
25 or 50 basis points?
If we think it's appropriate.
It could be 25, it could be 50, it could be 75, it could be 1.
We'll tell you what you need to know.
It becomes a question of how fast and how far do they go with rates?
Does he choose to de-emphasize parts of this forecast?
I'm blown away by the conversations we're going to have.
We're going to discuss all of this coming up.
Bloomberg Surveillance, the Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
At some point in time, there also has to be a renewed effort at the negotiating tables to try to achieve a negotiated resolution to this. Again, it's not impossible that this could continue for a very long time if, in fact, there is not a negotiated resolution. So I think we need to keep that in mind here as well.
General David Petraeus there, the former CIA director from New York. Good morning. Futures recover just about unchanged on the S&P and on the Nasdaq 100. We're positive 0.1%. Yields coming lower by a couple of basis points, 295.75 after having a little look at 3% TK in the last day or so.
Right now, we're going to digress here. I want to bring up a banner here on this story unfolding across America this morning from the Political article on Roe v. Wade. Bloomberg Opinion, with David Shipley's leadership, has put together a terrific group of legal scholars. We mentioned Noah Feldman earlier, but on Bloomberg Surveillance, we want to give you a first look at Stephen Carter of Yale University, who doesn't talk about Roe v. Wade. He doesn't talk about left and right. He just simply says, anybody can state that it's about the leaker, and he is brutal in talking about the leaker this morning. Waiting to get Stephen Carter up here. I guess I'm not going to get, there it is. Fine. A lie in a good cause can be excused, but a culture of leaking, as Washington has become, is no better than a culture of lying. None of the clerks it was my privilege to know so long at the Supreme Court would have dreamed of committing such an offense. I put those out on Twitter from Feldman and Carter. Right now, on the international moment in Ukraine, Alina Polikova joins us now, President and CEO of Center for European Policy Analysis. Alina, 40 years ago today, the Falkland exocet, the Sheffield went down, the Russian ship went down. It seems like Ukraine can do the big dramatic event like the Moskva and the rest of it. How are they doing, as you describe in your note, with conventional warfare and particularly establishing a no-fly zone?
Well, Ukraine is certainly outperforming all expectations, just as the Russian military has been underperforming all expectations. But right now, Ukraine has very little control of its airspace, and that's been the case from the beginning of this whole thing. So what they really need now is the ability to be able to prevent the missile attacks, the bombs that have been decimating Ukrainian cities now for 3 months. But in terms of their on-the-ground military operations, with massive weapons supplies now coming from the West, especially from the U.S., they're doing incredibly well and slowing down the Russian offensive in the East.
What's the truth here, Alina, in terms of just how poorly Russia is doing? There are some reports about morale being a real issue, about there being a real fear and unwillingness to experience the casualties that the Russian troops have been experiencing. How much is that the actuality versus a more tense battle with more progress in the Donbass region than some people let on?
Well, the Russian military has an incredible ability to adapt and learn. We've seen this now for years with their offensive in Syria, many years ago in 2008 in Georgia. So they tried this very aggressive approach to take over the capital, Kyiv, that failed. And they've learned from that. Now they have a much better understanding of Ukraine's capabilities. They know the weapons they have, and they're adapting. And they're certainly putting some of their top forces on the line here. Many Russian generals, and a shocking number of Russian generals, have been killed during this war. A huge number that we don't see in modern warfare anymore. But they are adapting. They're putting more on the line. But certainly, you know, if you're a Ukrainian, you're defending your home, your family, you're going to fight for that until the last breath. And the Russian soldiers, they don't really know what they're fighting for, except that they're there and they're being given orders. So morale has been a huge issue in terms of getting done what they want to get done militarily.
What's been the most accurate read you've gotten, Alina, on the casualty numbers out of Russia?
It's so hard to tell because, of course, everything the Russian government puts out there is going to be much lower than the reality. We are assuming that tens of thousands of Russian soldiers have either been killed or injured beyond the ability to fight. Some of the estimates suggest it could be up to 60,000 at this point. But it's really, really hard to know because, of course, the Russian government, the estimates there are somewhere around 1,500 still. So that gap is huge. So I'm guessing the truth is somewhere in between, but certainly the losses have been high.
With all your skill and scholarship, are the Russians trapped in Ukraine?
They're certainly not going to pull back. I mean, Mr. Putin's entire regime, his ability to stay in power, his survival really depends on a win in Ukraine. And he knows that, and he's not going to pull back. So I think the war will last, unfortunately, much, much longer than I think we had originally anticipated. But there's no backing down for Putin. He knows if he loses and he's seen as a loser in Russia, that's really the end of him and the end of his regime and potentially the end of his life, because that's how brutal Russian politics are these days.
Elena, what do you know about his health? Because there have been so many reports around that over the last couple of days. How on earth do we get a read on that?
And this is always the big question with dictators, always speculating about their health and their illness. We know that Mr. Putin, certainly during COVID, became quite isolated, very paranoid. He doesn't feel comfortable with people around him. People have to still quarantine before they're even allowed to see him. So we know that he's very concerned about his health just based on how we see him in public. And there have been many reports that he has a crew of physicians that travel with him everywhere. And there's even a joke in Russia that says, oh, we know Putin's coming to a meeting because the ambulances arrived first. I mean, we don't know. But certainly, he's a man now approaching 70. Life expectancy in Russia for men his age is much, much lower. So it's just hard to know what his health actually is. But the speculation has certainly accelerated.
Elena, thank you for your time and perspective this morning. Elena Polyakova there of the Centre for European Policy Analysis. And Tom, in many ways, it's gone much longer than people anticipated because a lot of people doubted how long the Ukrainians could resist some of this pressure from the Russians. And that was perhaps the early surprise of this initial conflict.
John, we are weaned in school academics in America of the Battle of Bull Run in the Civil War, where literally people drove out on carriage and horseback and took a picnic to watch the first battle of the American Civil War, thinking it would be over in 6 weeks. John, I can report it wasn't.
And this one already, Tom, going on longer than some people anticipated.
Yeah, well, there's no question about that, but I don't have any wisdom here at all other than, John, what we do at Surveillance, which is to listen to experts in international relations, as we just did, and importantly, the military experts. I'm chilled by how General Mark Kimmett was dead on before this war really started.
Just a couple of months ago, crude threatening to get through 150, maybe, through 140.
Well, yeah,
right
where
now
is
back
it?
to 104 on WTI, 104.88.
John, where is it without the China lockdown?
Morgan Stanley still think 130 even with some of that pressure from China. Then you've got Ed Morse-City, who caught up with Lisa and I in the last 24 hours, who, Lisa, seem to be taking the other side of that.
Yeah, definitely seem to be saying, look, we could potentially be heading lower.
Well, you took an extra day to recover, didn't you?
No, I skipped a day to recover from the Red Sox.
Is that what it was about? You sure about that?
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live from New York City, this is Bloomberg Surveillance with Tom Keene, Lisa Bravitz and Jonathan Ferro. Futures unchanged on the S&P and on the NASDAQ too. Here's a call from Oppenheimer. Morgan Stanley and JP Morgan upgraded. Even if the economy were to enter a recession, we believe that the banking industry would handle it better than any recession in history. We're not economists, but let's talk about the but. This is unlikely to go straight from labor shortages to recession. Given the large pullback in the stocks and modestly higher estimates, the average bank relative PE multiple is now down to 52%. So they're looking for some real upside here to those two names, Tom.
We're seeing, Stolfus and all at OPCO, they're very, very, constructive on the markets. They have been. They've participated in this bull market. But, John, again, it goes to the people adapt. Companies adapt, central banks adapt.
They're looking for 30% upside from here. I will just say that the market has not picked up on high yields translating as better for bank stocks. That's just not been the story over the last few months. In fact, year to date, we've seen this massive move in yields and banks just haven't participated.
Slotted in is a 2-hour conversation that we can have this morning with Kenneth Rogoff. He's professor of economics at Harvard. He is the former IMF chief economist, but far, far more than that. Truly one of our thinkers of this moment we're in. I mentioned Professor Rogoff to Gita Gopinath when I was at the IMF a number of weeks ago about this moment with foreign exchange and linking it into our greater global economy and, of course, our central banks. Ken, thank you so much for joining Surveillance this morning. Ken, I want to go to a quote from 20 years ago. I remember this paper, the Carnegie Mellon, the Freshwater School, Bennett McCollum, and the team. The once dominant ISLM framework for macroeconomic analysis has been sharply criticized, Axel Leonovic and the rest of it. Nevertheless, most undergraduate macroeconomics textbooks continue to feature ISLM models. Ken, take us from John Hicks, 1939, through what you and I were weaned on to where we are now. Does any central bank have a conventional theory in 2022?
Well, they still teach ISLM analysis and modern versions of it, but
Central banks, of course, were not expecting this inflation. They hadn't seen inflation for a long time. They didn't know what would cause it. They had some thoughts. And I think if you're honest about the academic literature, there was tremendous uncertainty about the Phillips curve, about the long run neutral rate of interest. So there's just massive uncertainty. And then you get hit by the pandemic and now the war in Ukraine, and the uncertainty is bigger than ever.
It was so important here, folks, and I speak of Project Syndicate. I can't say enough as a font of wisdom led by Kenneth Rogoff, the laureate Michael Spence, and Steve Roach, many, many others. But Ken Rogoff, you write in your essay there on this synchronized global economy. How synchronized are we? How synchronized is America with China and with Europe?
Well, I mean, I think the risks of having a perfect storm where Europe is in recession because of the war, China is in recession because of a failed COVID lockdown policy, and the United States because the Fed tightens too much, too fast, or however we judge it in response to inflation. And those all feed on each other. I mean, if China has a supply recession, which is really what we're talking about, that's going to feed inflation. It's going to hurt demand in Europe. Obviously, if the United States goes into recession, it hits financial markets all over the world. I would say the risks have risen palpably that this might happen. We could get, things could work out well. As I said, there's a lot of uncertainty, but it's not hard to see all of these risks. I mean, I admit in China, it's hard to see what's going on, but I feel they might already be bordering on recession.
So, Ken, do you think that already that the risk has gotten too much to the Fed moving too far, too fast at a time when a significant proportion of those on Wall Street think it's the opposite, that perhaps they're poised to be overly dovish and not respond enough to inflation that surprises again and again to the upside?
Well, I don't think we'll know for a while what they're going to do because they can raise interest rates a lot before they raise them too much. I mean, the idea at this, well, I think the idea that just to 3% would be enough is really unlikely. I think they're going to have to raise interest rates to 4 or 5% to bring inflation down to 2.5 or 3%. And I don't know if that is something they're going to decide to do. I'm not even saying that's something they should do. We really have to see what's going on, how deep the recession is. They've dug a hole, or to be precise, the huge stimulus in March, and I think a lot of the pressures on the Fed and uncertainty from academics and research has dug a hole, and it's not easy to get out of. I mean, there's no pretty picture here.
Ken, let's sit on that for a minute, that you think that in order to get down to a 2.5 or 2% inflation rate, they would have to raise rates 4 or 5%. You don't know whether they should do that. When will we know whether they should be opting for getting back down to that kind of target at some point in the next few years?
Well, I mean, it depends on what's going on, what the costs are. They could get lucky and some of the inflation turns out to be transitory enough so that they get a gentle landing. It is not impossible, but there, clearly a lot of things still that could go wrong. Escalation in Europe, China, getting worse, and it's irrational COVID lockdowns. And there's just a lot of uncertainty. So I'm not going to say I know exactly what needs to be done. But it's clear that things are way out of control.
Ken Rogoff, you are part of our global interior confidence in the dollar. From Mundell Fleming to Jacob Frenkel to your work, Maurice Opsfeld and the rest, and on, Rudy Dornbush and on, we come to a new point. Is the dollar study of value now, or is it secondary to what it used to be?
Oh, I think the dollar is more powerful than it ever was. And yes, central bank reserves have been diversified a bit, although a lot into currencies that are sort of pegging against the dollar. The dollar is dominant in trade invoicing. It's dominant in financial markets. It's dominant in, all kinds of transactions. It's surprising. I think it's actually by many measures more dominant than it was in the 50s when it was supposed to be the global currency.
Well, in the 50s, and let me digress then, Ken, this is so important on Germany right now in Europe. Is Germany held back by a memory of Otmar-Issing economics and such? I mean, is Germany reticent with the war in Ukraine from another time and place? Is the dollar from another time and place?
I'm not quite sure what you're asking, Tom. I mean, are you asking, is Germany not moving more aggressively in Ukraine because it's concerned about deficits? I don't think so. I think it's much more, the concern about escalation. How much do you push Putin to push him over a cliff? I think that's actually a very tough call, and the Germans don't see it the same way that the American administration does.
Yeah, I'm sorry, my question there wasn't all that clear. I fail everyone. I fail, Ken, when the Red Sox are in last place, so I'm failing right now. Ken, on Germany then in the Euro, the challenge for Christine Lagarde, given what I'm going to call the German reticence, how difficult a moment is this for the politician Lagarde?
Well, I think the toughest spot is that they seem to have connected politically raising interest rates, which they need to do, and scaling back on quantitative easing, which is a different animal in Europe. It's really a subsidy from north to south. If they start scaling back on quantitative easing, given all the fragilities, we could see spikes in interest rates in the south, in Italy and Portugal and Spain. So they need to raise interest rates, but they've really been painted into a corner by becoming the de facto Euro treasury, and they're backing the South. So it's a difficult political position. I think that's the most difficult part, not so much navigating deficits.
Professor, wonderful to catch up with you, sir. Professor Ken Rogoff there of Harvard. Ken, not on very often, Tom, but when I anchor with you every day, I often learn to translate what you actually mean.
No, I mean, there's so many things going on, and when you're talking to a force like Rogoff, that's what happens. But what he said there, John, about the dollar possibly stronger and more dominant than the 50s, that's a minority opinion.
Right now, it's the story of the last month, I think. Not just the breakout in bond yields, the breakdown in the equity market, but the fact we've got euro dollar down near 104, cable breaking down, dollar yen breaking out. It's been the story of the last month for me, Tom.
No, it's a lot. And again, as you mentioned at the very beginning this morning, it goes back to Folkets Landau and what Deutsche Bank has done, particularly with Matt Losetti leading off our coverage tomorrow, I believe, in the Fed show. And it just comes back to, look, it's an actual recession call.
Futures right now up about 0.1% on the S&P and the Nasdaq, basically unchanged. I'll catch up with Jim Bianco of Bianco Research in the next hour on Bloomberg TV, John, alongside Gershon Distenfeld of Alliance Bernstein, Tom.
That's wonderful. Before you go,
Mandy Zhu of Credit Suisse.
John, before you got anybody else you want to mention? Before you go, John, I mean, I'm getting hammered out in the Twitter zeitgeist that there's way too much baseball talk.
What about, Tom?
We got to go to Chelsea. I mean, I guess they're like in the final things between the Los Angeles Dodgers
on Twitter.
And,
How do you pronounce his second name, Tom? What's Todd's second name? Is it Bowley?
I think
Am I doing that right?
I think so.
The part owner of the Dodgers in this bid for Chelsea?
Yeah. I mean, the guy owns the Los Angeles Dodgers. That's all it comes down to.
Reportedly the preferred bidder for Chelsea. I've seen numbers like over $5 billion, Tom. I'm trying to nail that down. So interesting, because they were looking for $3 billion sterling, and at the time I thought we'd have a bit of a fire sale. They struggled to get it.
What's the debate here?
The debate is whether he will keep the club for 10 years without selling it, and I believe he's committed to doing that.
Okay, because there's Mr. Radcliffe, Sir Radcliffe.
It's about how committed he'll be to the club, whether he's a fit and proper owner, all of those things.
They want to make Chelsea like Real Madrid.
Running a Premier League club is really, really, really hard.
Look at Tottenham.
Precisely. You have to get into the top 4 to get into the Champions League. The fans are very demanding after the era with Roman Abramovich, so I think it's very difficult.
We have a countdown clock for the Fed. Should we have a countdown clock for the last time the Tots won an award?
Do you want...
It's like 5,000 days.
I think it goes back decades, Tom.
5,000 days, I think.
Would you like a countdown clock for Tots Liverpool? Is it Tots Liverpool?
That's exciting,
this weekend?
Saturday, the Late Show.
You're pumped for that, aren't you?
I am.
You coming over?
We'll
probably sort this out.
It's under discussion.
Outside of live programme. We'll sort it out later. I'll text you.
Weekend.
When we're allowed. Are we allowed to talk to each other today later?
Oh, really?
Okay, I'll work it out. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. There's a report that the US Supreme Court is on the verge of overturning the Roe versus Wade ruling that legalized abortion that prompted protesters to turn out at the court Monday night. Politico says it obtained a draft majority opinion from Justice Samuel Alito. According to the publication, Alito writes, quote, Roe was egregiously wrong from the start. If the court does overturn Roe, it could reshape the battle for control of Congress this fall. The Bank of England is expected this week to raise interest rates to their highest level in 13 years. It may also clarify how it plans to sell off some of its $1.1 trillion in government bond holdings. That would take the UK's central bank into uncharted territory. None of its major economy peers have yet sold government bonds accumulated under quantitative easing since 2008. A bipartisan group of U.S. senators wants to loosen Google's grip on the digital ad market. Bloomberg has learned they plan to introduce legislation that would force Google to sell off parts of its lucrative advertising technology business. The measure could also have implications for Amazon and Facebook parent Meta platforms. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I'm here at the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh there are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think as oil prices move up, the cost of that for the consumer becomes higher and higher, obviously, and that'll create, I think you could have a recession. I think right now we're probably growing at 1 or 2%. But if things slow down, I mean, the Fed is raising rates, oil's going up, we'll see where things are in 3 to 6 months.
Mark Lassery there, talking about the economics of the moment, the investment of the moment, the distressed debt of the moment, and maybe a little bit about basketball. Avenue Capital Group's Chief Executive Officer. This is the David Rubenstein, Bloomberg Wealth. Look for that tonight at 9 p.m. And Mr. Rubenstein joins us this morning. And of course, this is not all that well known. You know, coming out of the Baltimore Combine, that basketball scholarship you got to Duke University years ago, that worked out, right?
I was the last person to ever get a basketball scholarship to Duke. I went to Duke on a scholarship, but it was not a basketball scholarship.
It was not a basketball scholarship. We're making news this morning. Mr. Lassery, and it's great because there's so many people successful in business who do the sports thing, but it's really worked out for him with his small team up in Milwaukee, his tall team, I should say. What has he learned, or how does he link in lessons from basketball into the investment world?
Well, Mark Lassery is a basketball player. He played in high school, played 1 year in college. He loves basketball. His kids and grandkids love basketball. And he had a chance to buy the Milwaukee Bucks for a price that seemed very expensive at the time, but now seems very cheap. I think he paid about $550 million. Today, these teams are worth about $2 billion. So while he has a distressed debt business that's very good, I think he's very passionate as well about his basketball team, and they won the NBA championship last year.
What did he say about distressed debt? With all the cacophony, Ken Rogoff just on from Harvard making clear the algebraic function, the epsilon we've never seen before, this uncertainty. What did he say?
Well, Mark Lassery has been a big distressed debt investor for decades, but in the last couple of years, he's really gotten out of that business because there hasn't been that much distressed debt. He's gone into lending business a bit, but he's hoping, I guess, that there'll be more distressed debt opportunities as interest rates go up and some companies aren't able to do what they thought they were going to do.
Well, and these two ideas dovetail together, the idea of owning a sports team and alternative assets not necessarily being as fruitful as they have been in the past just because of the incredible demand and how high valuations have gone. How much is that a common discussion among owners of alternative investment firms that sports really is a frontier that hasn't been fully tapped?
It does seem that if you own an alternative investment firm, you're not really feeling complete unless you also own a basketball team or some kind of sports franchise. So many of my friends seem to own these teams, and they seem to be doing quite well because when Steve Ballmer came in and paid $2 billion for the LA Clippers, everybody's prices went up. And now we're reading about football teams in London maybe going for $4 to $5 billion and NFL teams going for $4 to $5 billion. So there seems to be no limit to how much you can price these teams at. And so you kind of feel left out if you don't own a sports team anymore.
Well, but is it a vanity project versus an investment? And this is actually a crucial question for a lot of people who are actually trying to get returns at a time when there has been so much overvaluation in many parts of the market.
Well, no one really has lost money buying sports teams in recent decades. I think it's very rare to find somebody's lost money buying a sports team. You make your money typically selling, not on the day-to-day cash flow, unless you're in the NFL or something like that. But generally, I think most people who are in the alternative investment world still are focused on the alternative investment world. It's a better way to consistently make money on year in, year out. Sports teams have other advantages, but they're not really being bought by people principally to make money. I think they want to have some enjoyment out of owning it.
You're a student of this, and the rap is the rich guys are using the public system, the public trough, tax dollars and such, and indeed law, depreciation of different assets within a sports complex to get this done. Is the law rigged so the rich guys can own the Chicago White Sox or whatever, name the team?
Well, throughout history, wealthy people have had advantages over people that are not wealthy. There's no doubt about it, and the sports world probably plays to that. But on the other hand, voters can vote these
we just saw this in
stadiums
Buffalo,
down.
in the criticism over the Buffalo Bills.
But they're not people protesting in the streets. We don't see people rioting in the streets against these sports deals. So, yes, they probably do favor the owners. But on the other hand, the voters can vote the officials out who support these deals, and we don't see that happening. So, yes, there's criticism that might be justified. But on the other hand, I think the general public wants to see the sports teams be as good as they can.
Yeah, let me get back to Mr. Lassery. What did you learn about what he's learned about investment through 3 once-in-a-lifetime events, a global financial crisis, a modern pandemic, and now this war in Ukraine? What's the lesson?
Well, the lesson is this is not good for the economy. It's not good for people who want to see investments go up. Obviously, he believes that we could be in a recession. We're not in one now. And I think the combination of high energy prices, war in Ukraine, and the higher interest rates now is not a good prescription for steady investment pace. I think a lot of people who are distressed debt investors are now licking their chops, saying that in the next year or so, there's going to be good opportunities.
Mm-hmm.
So how are they creating the liquidity ahead of that? Do you hear from people who are getting large piles of cash on hand in order to deploy it if there is a more severe downturn?
Yes, there's a lot of cash on the sidelines. A lot of people are waiting to see what the opportunities are, and I do think that people will think in the next year or two they're going to be distressed at opportunities, and the markets are choppy. There's no doubt about it. It's very rare to have interest rates go up on a consistent basis, as the Fed seems to be doing, without having some economic slowdown. We've seen that from 1960 on. Every time the Federal Reserve raises interest rates in a consistent way, it does produce an economic slowdown, and it does reduce inflation. It just takes a while.
David, thank you so much for joining today. David Rubenstein, of course, with Carlisle, and a full interview with Mark Lassery. Look for that on Bloomberg Wealth tonight at 9 p.m. Really interesting, and I believe they touch on a basketball team that has won 4 in a row, including crushing the Boston Celtics and the Milwaukee Bucks way as they did. Lisa, I got to go back to what matters here with, we're up 6 points here on futures, Dow up 33, which is the biggest response of the day was Abramowitz on Mets baseball.
Which tells you basically the level of uncertainty and anything other than the fact that the Mets managed to get a no-hitter on Friday night, and that's the one thing that we can say with some certainty. Honestly, I think that the uncertainty really is going to be the biggest theme for the next couple of weeks. But what does the Fed do with that? How do they sort of position in a way that allows the market to hold on to positioning that allows for an incredibly hawkish Fed while not necessarily indicating a surprise, either not 75 basis point, but even some sort of forward-looking projection?
And they position with the surprise of this surveillance this morning with Kenneth Rogoff saying the dollar is ever stronger, ever dominant, including going back to the 50s and the 60s.
You know, I would agree that this is probably the most important story of the past couple of weeks, because the stronger the dollar gets, as Lara Raim said, that is a massive de facto tightening globally. So at what point does something break? Has something already broken? I mean, really, at what point does it become a concern for the Fed and beyond?
Some of that Abramowitz gloom that has not touched the New York Mets yet. Yen a 130, 129.
Just not this year.
Please, 129.89 on yen a churn. Dollar not giving us strength this morning, but really worth watching through to tomorrow. In our Fed coverage, we'll have a very special show laid out, including with the former Vice Chairman Alan Blinder scheduled to be with us as well. And then, of course, we go on to the jobs report. And number is stunning. 3.5% is a survey statistic on the unemployment rate of America. On radio and television at 12 noon, one of my favorite people, Jane Harmon of Princeton's Wilson Center. Look for that at 12. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified. Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Live from New York City this morning. Good morning, good morning. A big couple of days ahead in this market. Equity futures right now positive 0.2%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Bond yields topping 3%.
Could we get to 3.25%, 3.5%? Yes.
I don't think we're at the peak yet.
You're going to see about 3.5%.
3.25 in this cycle.
Enough to begin slowing growth and start raising concerns about recession.
We are at the very beginning of the rate hiking cycle.
The market is pricing right now 200 basis points of rate hikes over the next 4 meetings.
It looks like the anticipation of Fed tightening is actually tightening financial conditions a lot.
The Fed wants to stop being a source of volatility.
If yields in the U.S. continue to go higher,
the Fed should deliver some shock and awe.
The Fed doesn't typically like to shock or surprise the market.
But if the Fed does what it needs to do,
if the Fed stabilizes things,
that will go a long way towards solving some of this fear.
A limited market reaction is probably going to be seen as a win for Chair Powell.
What is a win for Chairman Powell tomorrow? Joining us now is Gershon Diston, founder of Alliance Bernstein, and Jim Bianco of Bianco Research. Hey, Jim, what is a win for the chairman tomorrow? Is there one?
Unchanged markets. I think he's already telegraphed or forward guided that they're going to raise 50 basis points. They've already told us in the minutes that we're going to get quantitative tightening to the tune of $95 billion a month, and they'll put a little bit more detail on it. But I think a win is he says all of that, and the markets have very little reaction.
The call from Bank of America and Mark Cabana, and we caught up with him a little bit earlier this morning. This is what he had to say. It'll be hard for the Fed to out-hawk the market. A non-committal Powell on 75 basis points and that rate hike in June risk slightly dovish market outcomes. Can I come to you on that, Gershon? Does he have to validate what is priced in this market right now? Is that a goal of this chairman tomorrow?
I think this has been one of the most telegraphed
meetings that we've seen. It's clear, he's been very clear, wants to get ahead of this, already behind the curve. The very fact that they're they're going to go 50 tomorrow and considering 75 the next time means they're behind the curve. I think what he's going to have to sound very hawkish. Hope the market is prepared for that. And is basically going to say he's going to do whatever it takes, whether it's going 75 at a clip, whether that's going beyond neutral. I don't think market participants should be surprised by that, but of course, who knows how markets are going to react.
Well, let's talk about later this summer, because I think later this summer is more interesting. We get a CPI print on May 11th, Jim, get another one on June 10th. Then we get this Fed meeting on June 15th, which has forecasts as well. And I think we're all trying to work out how this Federal Reserve will respond to inflation as you start to see that glide path lower. That's that peak, mechanical peak in CPI year over year. How do you think they respond to that?
Oh, I think that the mechanical peak in inflation is largely expected, and that's not going to be a market-moving event. It's going to be indications of how fast the descent is going to be. And I also think the other thing to watch for what the Fed is going to be talking about, not just tomorrow, but going forward, is the employment situation. Jay Powell made some comments a couple of weeks ago about the employment market being unsustainably hot, which is code for I can raise rates a lot and not cause unemployment, which spooked markets because the belief is if he gets too aggressive with rate hikes, he might create unemployment. But if he believes he won't create unemployment, then he can continue to move forward. So I don't think that the inflation numbers are going to come down fast enough in the next 30 or 60 or 90 days to knock the Fed off their path. So it's really going to come down to the Fed's belief on the employment situation. How much can they hike without creating unemployment?
This is something that Senator Downs-Gain Griffin touched on as well. Take a listen to what Ken had to say to us.
If the inflation is transitory, if we are heading towards a 4% rate by the end of the year, he has a lot more room to maneuver rates in 2023. If inflation doesn't break soon here, he's going to have to hit the brakes pretty hard. That will put us into a recession.
Gershon, is that the dynamic that you're laser focused on too?
I just think, John, that we're not going to see CPI prints that we're all comfortable with till sometime in 2023. Like we have to remember here, this is not purely a demand problem. The Fed's tools are designed to deal with the demand side. This is a supply side issue also. And if we don't see some of the bottlenecks in the supply chain kind of work themselves out, now that's a base case for everyone, but if we don't see that, then in order to really get inflation under control, we're going to have to see the Fed go well beyond neutral. 2.5%, 3% is not going to do it. And that's a risk to markets and something we need to pay attention to. But this idea that we're going to all of a sudden be comfortable come June with CPI prints where they're likely to print, I think that's just very, very unlikely.
The dilemma for a lot of people, Jim, is that they get more uncomfortable as the year progresses, that actually this Fed faces downside risk to growth and prolonged inflation simultaneously at the same time year end. Jim, given the choice between curtailing inflation and supporting growth, have you got an idea on what they choose?
Oh, I think the Fed's priority right now is inflation. And I think that this is still a struggle for a lot of people to get their head around. As of yesterday, the S&P had corrected 15%, the NASDAQ had corrected 20%, and we printed a negative first quarter GDP. That was enough in 2018 to get the Powell pivot. We're not even close to thinking about something like a Powell pivot right now. So this Fed is going to continue to move more and more as we go forward. And the idea that the Fed moves until they break things might actually turn around to how many things do they have to break before they decide that they're going to back off on the rate hikes. And we're not close yet. I think they're going to keep going as we move forward.
Well, they're not doing it alone. The RBA joined them overnight. Mike McKee, a ton of Fed decisions this week. Australia behind us, the Fed, and the Bank of England in front of us.
Absolutely. And you asked at the top of the show whether we could get to a 3% handle on yields. We already got there if you live in Australia. The benchmark 3-year goes over 3% as the governor of the RBA, Philip Lowe, delivers a surprise 25 basis point increase in interest rates there. Nobody called that one. And you can see the reaction. Now, here's what's interesting. You can see how the 3-year yield, their benchmark, was above the base rate for the RBA back in the late 2010s. But look at the spread now. Look at the difference now. The market's way ahead of the RBA in thinking of where rates are going to go. Now, Lowe did promise they would do more. So that takes us to the Fed. How much more are they going to do, as Jim Bianco was just talking about? I mean, we get 50 basis points. That's what's expected at the meeting tomorrow, first time since 2000. But what does the chairman say about what happens next? What does Chairman Powell say about where they stop? How high do they go? Markets, are almost pricing in a 75 basis point move for June. That'll be affected by what Powell says tomorrow. But the markets are getting more and more and more hawkish. Are they going to drag the Fed along with them? And then you pop over the pond to the Bank of England on Thursday. They're expected to raise rates. They're leading the way. They've been higher than everybody else. Expected to go another 25 basis points up to 1%, which would be the highest in 13 years, and discuss selling some of their gilt holdings. The Fed's not talking about that yet, but the Bank of England is going to be, if they get to this 1% level, at the level at which they said it would be appropriate to start talking about selling some QT of their gilt holdings, and we'll see if that happens. We get the information much more quickly from the BOE than the Fed in terms of minutes.
Mike McKee, thank you. Looking forward to that too. Interesting that over the last few months, what we have seen is, yes, rate hikes from the Bank of England, but a pound sterling cable that has actually got weaker. Sterling weaker against the US dollar, in and around 125. Citi said this morning. They see 1, further Bank of England repricing lower, 2, deteriorating UK growth prospects, and 3, the absence of meaningful fiscal support to cushion the blow from high energy prices, and they see more sterling weakness ahead. For the yield curve, here's another question. What on earth happens with this? I've been surprised by the breakout of 10-year yield more recently and the steepness that returned to 2s 10s. 2s 10s right now, 21, after briefly being in negative territory over the last couple of months. The team at Morgan Stanley say this: maintain 2s 10s and 2s 30s flatteners, as the incoming inflation data and the Fed's desire for optionality will put upward pressure on front-end rates, while pension demand and rising global risk will keep long-end rates in a range. Jim, can I come to you on that? Is that the right way of thinking about this yield curve at the front end and the long end, and the dynamics that influence each part?
I think it is. This is typically the way the yield curve does invert, is that the long end of the curve, because of concerns about something breaking and risk-off concerns, holds in, while short rates run up through it, otherwise known as a bear flattener. And I think that's what we're going to continue to see. That's what we had been seeing all the way up until the early part of April when the curve inverted. And I think we're going to continue to see more of that. In other words, if you're looking at which rate is going to go up more in yield from here, it's probably going to be the short rates that are going to go up more than the long rates. And that's how you're going to wind up getting a yield curve inversion. So that's historically the way it's done. And there's no reason to think that this one's going to be any different.
Gershon, final word here just on treasuries, and then we'll return in the next segment to talk about credit. But on the yield curve specifically, your thoughts?
Yeah, I broadly agree with Jim that I think we should expect flattening, even an inversion. But I'll tell you what I'm looking at. I'm looking at the volatility across the curve. You look at the longer end of the curve, right, which is much more market-based. We're in the 92nd percentile of volatility over the past 30 years. What that's telling us, and I think rightfully so, is we just don't know. And it starts with the Fed. The Fed, I think you asked earlier, I think that Chair Powell is going to preserve his optionality. It's going to be very clear that he's going to be able, he will go as fast as he needs to. And what that means is the long end's done a lot of the work of the Fed already. It remains to be seen what happens in the future. I think there's much less certainty. I do hope, however, John, we start talking about some of the valuations, particularly in the credit markets, because it's not all doom and gloom. There are some opportunities here.
That's why I teed it up, because I know you're thinking about buying maybe a little bit more. We'll talk about that in a moment. Gershon Diston founder Jim Bianco sticking with us. Equity futures positive, a couple of tenths of 1% with some movers ahead of the open. It's Taylor Riggs.
John, I want to start with Western Digital. Of course, Elliott Management coming out this morning and saying, you know what, if you break up the flash drive business from the hard disk business, those two could be worth more than they are together. So that, of course, coming from Elliott Investment Management, of course, offering to break it up and also offer an additional $1 billion of capital injection in that flash business, as well as part of a strategic review and a spinoff of that business as well. You know, John, sometimes too much good news is actually bad news, and that's where we're going with Avis Budget Group here. Huge sales beat in the last quarter, but analysts are now questioning how sustainable it is. Adam Jonas of Morgan Stanley saying that he's struggling to justify buying the stock here at these current levels. Let's go to the downside. I wanted to take a look at shares of Clorox because it was a mixed quarter, that's according to Jefferies, but really some of those inflationary pressures that are hurting the company. They cut the guidance for the bottom line for the full year going forward, really highlighting some of those higher inflationary input costs. And finally, a similar story here with Pfizer. As you think about a guidance for the full year that was sort of left intact when you think about sort of the COVID pill, not perhaps going to be providing a boost as much as the company originally thought.
Taylor, thank you. Coming up on this program, the controversy around the flows of global energy.
To shut down the fossil fuel industry, it would be a catastrophe today. I think we're seeing this live in Europe with the Russian crisis.
That conversation up next.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
After 2 months of work, I can say Germany is not against an oil ban on Russia. Of course, it is a heavy load to bear, but we are ready to do that.
I think we need to talk about this with Guy Johnson in London and Anne-Marie down in DC. Guy, let's go back and forth on this just a little bit. Is this really a heavy load to bear for the Germans to decide to ban Russian crude?
It is. There are heavier loads to bear, and you've been making the point often, John, that others within the European Union have borne heavier burdens. For instance, Greece during the financial crisis. Clearly, this is going to have an economic impact. Germany is inching its way towards making this decision. Big decisions in Europe are going to get more difficult from here, John, as a result of which the divergence between European members is going to get greater. We are going to end up with a series of fudges, but progress ultimately is in the direction of making things more difficult for Russia. But it is going to be a heavy load. It is going to be something that ultimately Germany will probably have to bear. The Italians were making the point today that they think they need Russian gas until the end of 2022 to get through the winter. What is interesting, John, is that Europe is not built for this. Structurally, Europe is not built to make big decisions like this, the European Union. A lot of the key decisions require unanimity. That makes it very difficult. Countries like Hungary, countries like Germany, therefore, can have vetoes and slow things down. Mario Draghi the Italian Prime Minister was on his feet in the European Parliament a little bit earlier on, John, calling for the end of unanimity in key areas like foreign policy, talking about potentially moving in the direction of majority decision-making. That is miles away. But the fact that we're now talking about it highlights the risks that Europe faces here in making key decisions at the right time, John.
At the individual country level, what we have seen is certain countries come out with fiscal packages to soften the blow with what's happening with the energy price story. Anne-Marie, we've been talking about that stateside for a while. I haven't seen the policies just yet, though. Where are they?
Well, in terms of policies on oil and gas for Russia and their support for Europe, Jonathan, they really have just been pretty much saying that they're going to do whatever they can to help redirect flows from around the world to Europe as Europe really starts to try to unwind these commodity flows from Russia. But to Guy's point, we should also note this potential oil embargo, which does look like Europe is going to be on board for. I would call this a light embargo. You have Slovakia saying that they need an exemption. You have the fact that the European Union is going to be willing to give Hungary some flexibility as well, that are incredibly reliant because they're even willing to get on board with the sanctions package. So how much of these flows are actually going to be disrupted is really a key question.
Well, that's the question I've got, Guy. Just how much disruption will we actually see? And how much is this just about politics? The Germans trying to position this as a heavy load when really, relatively speaking, it's not a heavy load at all.
Relative to what? Relative to the great financial crisis from Greece's point of view, Italy's point of view, yes, it probably isn't going to be a heavy load, but key German industries are going to see a significant hit where we see gas being turned off. Oil is different though, John. Nobody uses a barrel of oil. The only people that use barrels of oil are refineries. And you made this point yesterday, talking to Julian Lee. You get Russian crude refined somewhere else, it becomes somebody else's barrel of oil, doesn't it? Or barrel of diesel or barrel of gasoline. And oil is a much more different prospect to dealing with than gas. Gas goes through a pipeline, it goes in one direction to one place. Oil floats around the world. Therefore, actually, are we going to see a decrease in the amount of oil that is available on the global markets, or are we simply just going to see a repositioning of those barrels of crude, John?
Guy Johnson, Anne-Marie, to the two of you, good friends of ours. Great to catch up with you both at the same time in DC and, of course, in London, respectively. Gershon Distenfeld, Jim Bianco back with us. Gershon, I promised you we'd get to this. There's a lot of stuff to worry about, but the price of the story has changed. And the price of the story has changed sufficiently enough for you that perhaps you like what you see. Can you walk us through it?
Well, I with the caveat that we don't know what's going to happen in the short run, we could still have we will still have more volatility, could be some more pain. Levels are starting to get pretty interesting. Think about this, John. You know, when investment grade corporate yields were around 2%, that wasn't very attractive to people. So they went and they kind of stretched for high dividend paying stocks. Today, you don't have to do that. The investment grade level is 4.6%. That's actually higher than high yield was just a few short months ago. And we don't have the same excesses in credit. We're only like really 2 years into from COVID, the COVID kind of sell-off. Companies haven't had the time to re-lever, to buy back shares, to make acquisitions, to ramp up their capital expenditures. So credit always protects better in the downturn. And given the uncertainty, I think this could be probably is a buying opportunity. No doubt, things feel bad. But you look at almost every time period where things felt bad, whether it was TMT in 2002, the global financial crisis in 2008, the European debt crisis in 2011, energy in 2016, COVID in 2020, go on and on. It felt really bad at all those times, and those were all great buying opportunities.
Jim, are things uncomfortable enough to say, I'm so uncomfortable it's worth buying?
Well, they're a lot closer to that than they were. I agree with Gershon about 2 months ago or 3 months ago. And yeah, you're starting to get some real yields. I mean, if you want to go all the way to the end of the risk curve, triple Cs are now north of 10%. Yeah, it's a risky bet, triple Cs, but you're now getting 10% plus on those yields. So I think we are a lot closer to it being a buy than we were a couple of months ago. And yes, I agree with Gershon that, the next couple of months, we don't know what's going to happen. But in the broader picture of things, when you start looking at yields like we've been seeing now, 4.5% on investment grade, up to 10 on triple Cs, you have to start looking for opportunities.
Gershon, can you clarify with a little bit more detail where you're looking to play offense then?
Look, I think very broadly, the dispersion is quite low. And what that's telling you is we don't expect a lot of winners and losers. We had a default cycle already. So you kind of want to be as broad-based as you can here.
I've had a lot of people say, go to cash, build out a cash position, just so you've got that optionality on dislocations. Gershon, how do you approach that story, just that cash position, to play that defense side?
Well, timing is everything, John. Yeah, if you were smart enough to go into cash a few months ago, kudos to you. Of course, there are a lot of people that were hiding in cash after COVID and as markets started to run up. That's very, very hard to do. Look, we've been hearing for a long time that yields are very low. And, let's wait for yields to go up. As if when yields actually go up, like we're seeing now, it's just going to happen in a vacuum. They're just going to go up, spreads are going to widen, and it's going to be a great buying opportunity. No, that only happens when you have stress. And we have stress now. I can't think of a time in my career of 25 years where when markets felt really good, the fundamentals were really strong, and then it was an outsized buying opportunity. It's usually the other way around. And investors that go against the grain, and as long as they have more than like a 6-month time horizon, are likely going to be rewarded at these levels.
Gershon, can I just respond with just one question? And that's QT hasn't started yet. We've only seen one rate hike. There were people listening to this saying, Gershon, I'm with you, it feels uncomfortable, but I think it's going to get even worse. What do you say back to them?
I would never say that there aren't risks out there. I think certainly if inflation doesn't come down, the Fed's in the impossible position. I think Jim touched on it earlier. I think they're going to keep on going and not care about markets. So that is definitely a risk there. But you have to look at what's happened in markets already. The Fed is clearly, we don't have to debate whether the Fed's behind the curve. They're behind the curve, right? They should have started hiking rates in retrospect probably 12 to 18 months ago. But the market's done a lot of the work for them, right? The long end of the curve, which is where a lot of rates get set, has kind of done that work already. Again, could it get worse? Sure, it can. There's always risks out there. But I'm a betting man. I play the odds, and I think the odds at these levels are pretty good.
Gershon, wonderful to get your view. As always, it's been too long, buddy. Gershon Distenfeld alongside Jim Bianco. Coming up, the morning calls and later, division on Wall Street. There always is. Bear market rally or signs of a bottom. Mandy Zhu at Credit Suisse weighing in.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Five minutes away from the opening bow this morning. Good morning. Futures just about positive on the S&P. That's the price action. Here are your morning calls. First up, Piper Sandler downgrading Kellogg's to underweight, expecting consumers to reduce their spending on cereal due to surging inflation. Your second call from Oppenheimer upgrading JP Morgan to outperform, recommending investors take advantage of recent weakness with higher rates supporting profitability. And Bank of America downgrading China Communications to neutral, highlighting rising competition and weakening pricing power following its quarterly results. Coming up, bear market rally or nearing a bottom. Mandy Zhu with Credit Suisse joining the debate on what's dividing Wall Street. From New York, this is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
24 seconds away from the opening bow this morning. Good morning to you all. The state of play looks like this. Positive 0.1% on the S&P 500. On the NASDAQ, just about positive. Really strong finish into the close in yesterday's session on the S&P. Let's see if we can get some follow-through around the opening bow. There is the opening bow. Switch at the board and get to the bond market. Your yield looks like this on a 10-year. It comes in a full 6 basis points after having a little look at 3% for the first time since 2018. Right now, 292.05. Euro dollar clinging to a 105 handle over the last few days. Doing the same again today briefly and then breaking out. Euro dollar showing some strength on the euro side of things by 0.5%. 105.62. Crude down $1.44, down 1.4%. Now 1.3 to 103.73. About 23 seconds into this, the S&P 500 higher by 0.1%. Breaking it down with some movers is Candy Lyons.
Well, John, let's begin with BP because you're seeing a nice lift to those ADRs in the U.S. trade at the opening bell, up about 5.5%, following on the gains we're seeing in the London session. Yes, the company taking a $25.5 billion charge related to its exit from Russia, the write-down of its Rosneft assets. But the good news coming in the form of a, quote, exceptional quarter for its oil and gas trading business and a $2.5 billion boost to its buyback. Meanwhile, AGCO, the agriculture equipment maker, is up about 2.3% after raising its full-year forecast. Interestingly, the company talking about the supply chain issues it's still facing, compounded by the war in Ukraine, but saying it's substantially increasing prices to offset some of those higher input costs. Meanwhile, Estée Lauder partially blaming the war in Ukraine for its cut to its full-year guidance, also citing China and the lockdowns and store closures there, plus the impact it's had on supply chains. That stock down more than 12%. One analyst over at Bernstein calling the outlook catastrophic. Finally, also an outlook cut over at Rockwell Automation, cut its view by 23% at the midpoint. Saw up to $10.61 a share. Now that range is down to $8.20 a share at the high end. The company saying it's seeing strong demand, but supply chain issues are impeding its ability to actually fill orders. That stock down more than 9% at the opening bell, John.
Kelly, thank you. Estée Lauder just basically blaming everything under the sun. They said they attributed this to the outlook over store closures, supply chain disruptions in China, higher cost disruptions in Europe due to Russia's invasion of Ukraine, and on and on and on, and that stock is getting absolutely battered. More broadly, on Wall Street, it's JP Morgan versus Morgan Stanley on the south side. You've noticed this. Mike Wilson comes out with a no. A few hours later, Marko Kolanovic comes out with a no. This is the last 24 hours. Morgan Stanley saying, quote, "We suggested the bear market was entering the phase when virtually nothing would work, even defensives. The market is currently so oversold. Any good news could lead to a vicious bear market rally, but we want to make it clear this bear market is far from complete." The team at JP Morgan disagreeing, as you'd anticipate, saying there's too much negativity in equity markets and credit, writing the following: "We feel that a pro-risk stance is reinforced by the past week's hints of more infrastructure stimulus and regulatory easing in China and the positive news from the Q1 reporting season." Taylor Riggs is up to speed. Good morning, Taylor.
You know, John, I guess they say a good bull-bear debate is what makes markets, keeps us all in healthy public discourse about the future direction of these markets. Let's take a look here. Of course, you mentioned sort of pulled quotes from those papers here. Talk about, of course, Morgan Stanley. Now looking at a drop here that would be at about 3,800. Now we're at about a 4,150, so that's sort of some downside risk here. As you mentioned, JP Morgan, perhaps maybe the bull in this scenario, and looking at maybe the sentiment has gotten so negative that maybe a rally is soon. As we do know, and you can see there at the bottom of your screen, we've had a really rough start to the year, arguably one of the worst starts ever when you think about performance here for January through April. I think what that means is we sit here at a 4,160 and sort of look at where a lot of strategists think that we'll end for 2022. Average and median is right at about a 48.50, 48.70, right? So it sort of gives you an indication of the upside. The downside actually is even higher than where we are now. So perhaps maybe still some room to run as we think about closing out the end of the year, that we still have a lot of months to get there. Quickly, just come and take a look at this chart. John, we did, of course, enter into correction territory. Again, you had a little bit of a rally yesterday. Thought that we were going to climb out of that 10% level. Still no. So we're still there, of course, in that sort of correction territory from some of the recent highs that we've had as of late.
Hey, Taylor, wonderful work as always. Taylor Riggs there breaking it down. Morgan Stanley versus JP Morgan. The good news for both those names is they both got an upgrade from Oppenheimer this morning on upside potential. Oppenheimer seeing 30% more upside potential to those shares from the current level. They go on to say this over at Oppenheimer: even if the economy were to enter a recession, we believe that the banking industry would handle it better than any recession in history. The team over there going on to say, we're not economists, but this is unlikely to go straight from labor shortages to recession. Even the large pullback in the stocks and modestly higher estimates, the average bank relative PE multiple is now down to 52%. They recommend outperform on Bank of America, Citi, Goldman, and US Bancorp. They seem to like the whole sector. But Morgan Stanley, JP Morgan standing out. They see around 30% more upside over at Oppenheimer on Morgan Stanley and on JP Morgan too. As you know, that's a trade that has not worked at all. Even with yields higher, banks haven't performed, and volatility has stayed elevated. Amy Wood-Silverman of RBC came on this program in the last couple of weeks and said, perhaps we've broken out into a new higher volatility regime, something that could stay with us for a while. Take a listen.
The past 30 years, when you shift vol regimes, so, you know, kind of from a 20 to 30 to 30 and maybe even higher, this is generally pretty bad for stock returns. The years where VIX kind of averages 30 or higher, that equates to about a down 11 to 15% return on the stock market.
Mandy Zhu, Credit Suisse, joins us right now to discuss some of these themes. Mandy, can we start there? Do you agree with that? Do you think we've broken out into a higher volatility regime relative to, say, the previous 10 years?
I would agree with that. So, clearly this year we've been in a higher volatility regime on the back of elevated macro uncertainty. I think what's unusual, what's notable about this year's vol regime is that if you look at previous years, for the VIX to average as high as it has, for this year, we've generally been in a recession or, a very dramatic growth slowdown. Whereas this year, of course, U.S. growth is still holding up, albeit, recession fears are growing.
So, Mandy, what has changed? What are the factors that you think will lead to this volatility regime remaining, persisting at these high levels?
I think, the ongoing, inflation debate, Fed tightening, growing recession concerns. I think as long as we still have a lot of uncertainty kind of hanging over the market, as long as macro volatility, rates vol, FX vol, commodity vols, as long as those are all still at multi-year highs, outside of the March 20, I think, equity volatility will likely get supported. But having said that, what's actually really notable about the equity move this year is that it's been relatively muted compared to the spot sell-off, right? So that's something that we've been highlighting. S&P down, over 10%. If you look at the VIX move, yes, it's higher, but the absolute level of the VIX, as well as the change in the VIX, has been actually a lot smaller than what you would anticipate given the, the S&P move, and that's really on the back of just lack of demand for out of the money, especially put options on the part of investors. We're not seeing as much hedging activity as we normally would with this type of drawdown.
Is the same true of call options and call option demand? Because that was a massive pillar of equity demand over the last, say, year or so, Mandy. Has that changed too?
Yeah, so let's break it down, at the index level, at the single stock level, because, the investor base is actually quite different. So if we look at the S&P at the index level, the lack of demand for upside calls, that's coming from more institutional investors. And I would say on the part of the institutional investors, it's really a lack of conviction in this market, right? So we're not seeing a lot of hedging, but because, a lot of investors have already de-risked, have already taken their exposures down, we're also not seeing a lot of upside call demand. No one's really hedging that right tail either, just because they don't believe in it. Now, if we look at the single stock level, that's actually the more notable story, because that has, over the past 2 years, has been primarily driven by retail investors, right? In terms of option activity, buying of upside calls at the single stock level for leveraged upside exposure. And there, we've seen a dramatic decline in terms of upside call demand. So to give you some, a comparison, if you look at the top stocks in the S&P top 100, last year, about, a quarter of stocks at any given time was trading with inverted call skew, which is a measure of very, bullish sentiment. Right now, it's zero, right? I think and then that coupled with the falling call volumes indicate that retail has also capitulated in this environment.
So, Mandy, these are all observations that you've made and many other people have made as well. What does it mean for how you trade this market?
So from a trading perspective, we're actually getting pretty bullish in the short term. So we're recommending adding tactical upside exposure in the market at this point, just given how pessimistic everyone has gotten. People have de-risked, people have capitulated. I think the setup going into tomorrow's Fed meeting is very similar to the last 2 times where, on the back of a big pullback in the market, people getting really bared up. And as long as the Fed, comes out and doesn't come out more hawkish than what is already priced into the market, the bar is very high there. I think we're set up for a bounce.
A bounce? Would you call it a bear market rally? Would you call it that?
Well, we'll see. I think, a longer term 6-month and 12-month view is more constructive. So I would say still, more constructive. I wouldn't say this is a bear market rally, but certainly, I don't think it's a straight line up, right? I think we're going to see more turbulence for the next 6 months.
Mandy Zhu, the Credit Suisse. Mandy, great to catch up with you, as always. What a difficult market to read at the moment. To make it easier, it's just been brutal over the last couple of months, because it's not just been an equity story, it's been a bond market story as well. Just a bit of breaking news. I want to go over to Taylor Riggs to get you that. Hey, Taylor.
John, as you know, we woke up to a leaked memo, of course, this morning, perhaps maybe a leaked early draft of that potential Supreme Court decision that we had. Politico, of course, coming out. We are getting a statement here from President Joe Biden about sort of the hearings that we're undergoing when it relates to Roe versus Wade, and of course, sort of the big debate debate up here for issue around abortion. Biden, of course, coming out releasing sort of a 3-point statement here in sort of reaction to at least a leaked report that we hear for now is an early draft of that, but really coming out and saying that basic fairness demands that Roe versus Wade, of course, not be overturned, and is saying that, of course, now we have to go back over to voters in November to uphold some of those rights. If indeed what we are hearing from that is that it goes sort of from the federal law back down to the states to individually decide sort of the future of this. So again, comments here from Biden about early reports and an early draft of that ruling.
Taylor, appreciate the update. Thank you. Coming up, the U.S. trade chief considering relief from U.S. tariffs on China.
We need to be looking at our economic policy tools across the board. You want to look at tariffs? Sure, let's look at tariffs.
That conversation up next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
We need to be looking at our economic policy tools across the board. You want to look at tariffs? Sure, let's look at tariffs, but also let's look at monetary policy, fiscal policy, let's look at tax policy. All of these tools you need to look at. We need to make sure that whatever we do right now, first of all, is effective, and second of all, doesn't undermine the medium-term design and strategy that we know we need to pursue.
The US signaling some relief from China tariffs, that it could be on the table to fight inflation. This as fresh regulatory pressures continue weighing on Chinese tech stocks, and maybe China has to back away from that. Bloomberg's Ed Ludlow joins us now for more on the West Coast. Morning, Ed.
Yeah, good morning, John. It's the latest evidence of how anxious investors are about the Chinese technology sector and how present the risk is for further regulatory clampdowns by policymakers in that country. Here's what happened on Tuesday. You go to the Hong Kong Open and a local news report that curbs have been placed on an individual with the last name Ma. We saw a drop of as much as 9% in Alibaba's Hong Kong listed shares. Then we later got clarification that the Ma who had been curbed had a last name with 3 Chinese characters. Jack Ma, the co-founder of Alibaba, has a last name with 2 Chinese characters. So all told, that stock closed down 1.8% in the Hong Kong session. But we saw volatility and wild swings in the Hang Seng index, for example. The fluctuations kind of stand in contrast, right, to what we saw just a week ago. Throughout last week, the Hang Seng making big gains, US-listed shares of Chinese companies making big gains because policymakers were communicating that we would see this regulatory ease that JP Morgan's talking about, that there would be support for the technology sector and the platform economy. But the anxiety does still seem to be there. Just looking at my Bloomberg, John, we're down by a few tenths of a percent, both on the NASDAQ Golden Dragon China Index and Alibaba's US-listed shares. But just a few minutes ago, we were up more than 1%. So we're already seeing volatility in this session. If we do get regulatory easing, of course, then there's the issues around supply chain and the COVID action we're seeing in mainland China, which is a further headwind, a further risk. Also important to note, John, that it's a holiday in mainland China, so those markets are closed.
Ed, one company that you don't cover so much, Estee Lauder, is down about 5%, bouncing off the lows. But once again, another company blaming supply chain disruptions in China.
Throw the kitchen sink.
And a lot of other things too. Rosenblatt cutting Apple's price target today on China risk. They said the following, Ed. Earnings were tempered by expectations of larger supply disruptions in the June quarter. We don't know when China ceases to be a COVID risk for Apple. Ed, how much of this are you hearing for this company?
Both, and it's 2 facets to it. The supply chain for Apple is key in China, right? A lot of components are made there, assembly is done there. But also, they've for a long time relied on a resilient Chinese middle class. You know, you think about earlier in the year, one of the biggest surprise stories for Apple was the success of expensive Mac computers. There was a lot of evidence that they were attracting first-time buyers from mainland China who had never bought the MacBook product before, and that their own in-house semiconductor, their own chip, was part of that driver. So if they're having supply chain disruption, that's a hit to both the top and bottom line. But there's also concern about the resiliency of an economy that's really helped to grow Apple, both on the top and bottom line, in recent quarters throughout that pandemic period.
Ed, thank you, buddy. As always, getting up early on the West Coast for us. Ed Ludlow there on the latest with Apple and beyond. Apple down about 0.4% in early trading, about 30 minutes in or so, 20 minutes in. The story in China, though, the data terrible recently. The PMI's coming into the weekend. We're in the 40s, the low 40s for the non-manufacturing PMI. Hong Kong GDP came in lower than expected, contracting more than expected, and it reads as the following. The economy faced immense pressure in the first quarter of 22, externally moderating global demand growth and epidemic-induced cross-boundary transportation disruptions posed substantial drags to exports, according to a government spokesperson. Damien Sassower of Bloomberg Intelligence with us. Damien, just how bad is this right now for mainland China and Hong Kong too?
Well, I mean, look, let's just talk about the numbers, right? We saw a 4% GDP hit to Hong Kong in the first quarter. The market was expecting down 1.3%, so that's a pretty big miss. All of it due to the lack of consumption, right? I mean, we knew retail sales was weak. Retail sales was down 14.6% year over year in February. We have another retail sales print in Hong Kong hitting on Thursday. It's not going to be much better, Jonathan. Exports are the story here, though. Exports are down, 9% year over year in March. China, which is obviously a huge export partner for Hong Kong, down 13.6% year over year. And if you expect, quarantine-free travel cross-border between Hong Kong and the mainland to improve at any point this year, good luck, you might be waiting for Godot, because that's exactly what's going to need to happen in order to hit that sort of 1.5% to 2% GDP target positive for the full year 2022. Good luck getting there.
You've got a few things on your radar. This, and then, of course, Russia. And Russia's a full-time job in and of itself. Some of that debt, Damien, I've never seen volatility like it in the Russian debt market. What is happening? Are they going to default? Are they not defaulting? What is the issue at play here?
Well, I mean, look, all we can really do is hang our hat on the fact that the credit default swap market, I have never seen anything like the 360-degree move we've just seen. I mean, we had CDS spreads in the tens of thousands, and now they're back down to 3,700. What that means, just in terms of the probability of default, Jonathan, is that the market was pricing in Russia default at almost 99 to 100% for this year. It's now down to below 50%. Like within a snap of a finger. So that's a huge, huge turnaround. If you look at the bonds that basically Russia's paying off here, they were trading at 25 cents on the dollar just a few days ago. Now they're trading close to par. So these moves are massive. And look, the question begets, how much longer can Putin and Russia go down this path? I mean, how willing are they going to be going forward with all the pressure from the West? I mean, your guess is as good as mine, but I don't think they have the stamina that much forward.
What do you think dollar ruble's doing down in the 60s?
Yeah,
Does it have any business down in the 60s at 67?
Great question. I was actually just having a conversation with this. That dollar ruble print that we're seeing is implied by the euro and the yuan crosses, basically, because those are the only ones that are trading. Dollar ruble does not trade. That dollar ruble print is basically for domestics, and they can't really move their money into and out of ruble to dollar. So really what you're talking about here is there is liquidity, there is movement going on in yuan ruble, in euro ruble, obviously due to the energy prices, and that's kind of filtering through into dollar ruble, driving it below 70. So yeah, I mean, look, if for all intents and purposes, so long as people are importing Russian crude and Russian gas, it looks like the dollar ruble cross is going to continue to appreciate here.
Just bear in mind, March 7th, the high of the year, on a closing basis, the high of the year was close to 139. So we've basically cut things in half on that currency pair. Damon, I just had a final question for you because we've talked about this over the last couple of months. Typically, you think about ability to pay, willingness to pay. We were trying to identify the problem with Russia and whether it would just come down to whether they could actually physically get the money, whether it's about the logistics of paying. Have we established whether they still have the ability to pay?
Well, that's a great question. I mean, look, for me, this is what it comes down to, right? I mean, Citigroup, who is the payment bank here, I mean, Bank of New York Mellon, who basically the correspondent bank, they approved the monies that they should be paid out, but Citi still needs to get the authorization from the regulators, from OFAC, in order to make payments to creditors. Now, we hear that money is already happening, that it's already finding its way into client accounts. But, every single time Russia's going to have to go through this mess, this morass, in order to pay its creditors. At some point, the rubber's going to meet the road, in my opinion. And I just don't think Putin has the willingness, considering the fact that half of their reserves are now frozen offshore, and they have to prove that the monies are coming from non-blocked, non-sanctioned accounts, and to, kind of validate that on the part of Citigroup. It becomes an immense issue. And so, your guess is as good as mine, but I don't believe it's going to be an easy slog going forward.
Demis Sassar of Bloomberg Intelligence, brilliant, one of the best. We appreciate your time, sir, as always. Thank you, buddy. Dollar ruble, seeing some ruble strength again. 67 handle on dollar ruble. If I'd said to you at the start of March 7th, when we were staring down 140, that we'd get down to 67 a couple of months later, I don't think you'd believe me. Up next, your trading diary. The Fed tomorrow, payrolls Friday. A lot still to come this week. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions.
Five, 26 minutes into the session, doing okay on the S&P, basically unchanged. Rolling over on the Nasdaq just a bit, down a third of 1%. That's the price action. Here's your trading diary. Tons of data at the top of the hour. Factory orders, durable goods coming up, jolts as well. President Biden discussing the war in Ukraine at 3 p.m. Eastern. A Fed rate decision. Chairman Powell news conference coming up tomorrow. The Bank of England with its own rate decision on Thursday. And finally, your payrolls report this coming Friday. The estimate 390K, the previous number 431. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145. and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010, after staying for almost 1 year in the hospital. He died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter. It's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down dollars. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all of these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the